you dirty dogs, welcome back. Rich McDonald is back, but for some reason...
Am I back?
Are you back?
I'm invisible by the looks of it. Wow, I didn't even know that was possible. I have to remember that if the guys don't want to show me, then they can just blank me out completely.
Thanks, guys. Thanks. I paid you guys well. That we just had this voice, but no, jokes aside, so pleased to have Rich back. We've got so much. Let's just get you across what we've got today. We've got Axel Rudolph coming.
Oh yeah,
up.
here we go. We've even got coming up slides.
Oh, 8:45. Are you excited? I'm excited.
Yeah, because Pega was on holiday, and then we had her in the studio, and then I was away. So eventually we can get back on it. We're actually going to do a recap with her just so she remembers everything.
Do you know why I'm excited as well? Because EasyJet had quite a week, and also Intercontinental.
Oh yeah.
You were away.
I noticed that was upgraded on Friday actually.
Yeah.
Not bad about that.
Yeah.
But yeah, and then Axel Rudolph at 9:05.
Yeah.
The fans absolutely love Axel. I think we could have a whole show of Axel and they would be happy.
Yeah.
Time after time after time of all the feedback, that was the consistent thing, that they love you, Ange, and that they want more of Axel.
You don't have to say that just because I'm here. I can say this. I really missed you when you were away.
Oh, well, I must say, when I tuned in on Friday and you were sitting here by yourself, then because I know how hard that is.
But call out to all those wonderful viewers out there who, you know, were wonderful whilst Rich was swanning about, you know.
Did they keep you company?
They did keep me company. Monkey Man, Andrew McKelvey, Sonali, you know, Tiffany. Whilst you were, did you clear out your hotel fridge?
Yeah, I've certainly got lots of shampoos and conditioners.
I know Wardy tried to get you out, but he said you had to go back and call Mummy.
That's right. We were very well behaved right until Friday, and we sat down on Friday lunchtime. This was Tom, myself, and Brittany, who was the events organizer.
You didn't lock her in the lift again on Friday.
I know, that's right. She got stuck in the elevator. Yeah. But on Friday, we sat down for lunch. We had just arrived in Dublin. We had, you know, an early flight on Friday morning, and we landed and we went for a walk around Trinity because our hotel was right next to the Trinity campus. And then we went for chicken wings at Elephant and Castle, because where else would you go?
You went for chicken wings.
Chicken wings. These are the best chicken wings in the world. Elephant Castle, and we ordered, and Tom turned to the waiter and went, "And a Guinness, please." And it was like 12:10, you know, on the Friday morning. I was like, "Yep, okay, I'm in. Guinness, let's do it."
Is it like at that place opposite the Tabernacle? Is that right?
In
Elephant and Castle?
So Elephant and Castle in Dublin.
Oh, in Dublin,
it's
not
the name
here.
of the
Right, I was like, wow, here in London, that's like pretty edgy.
Yeah, no, it's the name of the restaurant. But any Irish viewers, I'm sure they'll know it very well. Now, I have a quick hello to say, because met this wonderful person up in Birmingham, and she came up and she told us that we have our official youngest viewer who watches us every morning before going to school.
Wow.
And even on the trip to school, her mum makes her listen to us.
Nice.
Instead of Taylor Swift in the car as well. So a huge shout out to Emmy Hegarty, who watches us, 13 years old.
Hey.
And she goes to King's High Warwick School. Yeah, thank you so much for tuning in every morning. I hope you learn a lot. Certainly drop us a few comments in to say hi. But this morning, Ursula let Emmy listen to Taylor Swift in the car on the way to school.
Best Taylor Swift song, Bad Reputation. None of them, Bill said none of them in there.
Yeah, well, that's one option. No, Shake It Off, got to be.
Really?
Yeah, the old traditional.
Oh, I thought you were going to say Blank Space or something like that. But truly wonderful to see everyone. And Emma, my 9-year-old, is so excited to see you. She's got a nickname for everyone. So you're Mr. Doggy.
Mr. Doggy. Yep.
Can you explain to the viewers why? Because they've been asking me, why is he called Mr. Doggy?
So on my WhatsApp picture, it's myself and my beautiful dog from New Zealand, Layla. Because when I was
Lab?
Black Lab, that's right. I was stuck in New Zealand for COVID for 2 years. I went for 2 weeks and ended up staying for 2 years. So my job across there was dog walking because I used to be able to trade the markets while I was walking Layla.
So amazing. R. Sachs, whom I met there as well, and you met as well.
She
She's
was
just
the
said, good
star of
morning.
London.
Yeah. And Andrew Dack was there. A lovely man came up to me and said, don't worry, I'm not Monkey Man.
But Monkey Man, where are you there?
Yeah,
So
we're
I thought
there.
it'd be very funny if you
Were
came
you there?
along, introduced yourself, and then actually rental this week, which was on a pub crawl for the week, he says.
Producer Fred was there, those of you that met, and my daughter calls him Mr. BAD. So, yeah, very great time.
Glad you enjoyed it.
And then, like a trooper, I thought she was going to finish, you know, she watched your presentation, everything, and I thought she was going to say that was really good. She turned into, how I going to remember.
And that was the thing. It was a real razzle dazzle. It was almost like, I think the description of it would be everything Tom's learnt in his life and all the stories he's got for his life. This was like a trailer, all right? It was a 90-minute trailer to the full movie because we were moving so fast and you just got snippets of, you know, all the strategies and everything on the platform. And yeah, it was real. It was Friday, maybe by Thursday, I just managed to keep up. Just.
It made Mad Max look calm.
Yeah, and that's exactly how he was describing it. Yeah. Mad Max.
Yes. Right.
Well,
so
we must remember that we have a stock market and financial markets to cover. So
big, huge week. Do you want to go to overnight action first, or do you want to? I mean,
I missed the music. Let me hear that music. Overnight action.
Hey, welcome back, you dirty dogs. We are going to take you through some of the overnight action, what happened overnight, so that you know how to trade it, right? So hit us up, Rich. The first thing I'm going to say is, this is not a week for, I'm so pleased to be able to say this, not a week for Trump, not a week for the cabinet, not a week for JP. This is a week for NVIDIA, people.
I was thinking, yeah, Jensen's going to be in here.
Yeah,
That's right. It is
Jensen's
time
week
to get proper results and proper earnings back in the forefront of everybody's mind. We got NVIDIA Wednesday night after the close.
Yeah,
Excited?
I'm very excited because, as you know, I was one of those people that was, someone beat me to it and they said, you know, in the show, and they called out, and you on stage, and they said, I'm long NVIDIA, how do I cover this? And Tom Sosnoff said, you know, only way you can do this is two ways. You can cut your position less, you know.
Well, that's it. They were saying they're long and they've been long for a while.
Yeah.
How do they protect the profits? That's what they said, wasn't it? How do they protect it?
Or sell puts, and that moment our eyes locked. So I've been.
That's right. I pointed to you and said, "This is the question for you." And he was very plain. The only way to do that is just sell some, take some off the table.
Yeah.
Whether it's 10%, 15% of your position. If you have been genius enough to hold NVIDIA all the way up from, well, what would be $10 now, but was $100, $200 then. Don't be scared to take some off the table because it's going to be a volatile week. You know, who knows how those numbers will be? Who knows if SMCI, you know, I've sort of been following that from afar. But if we, let's see if we can get SMCI chart up. This is quite scary what's been going on here. So that's not the right, that's a 3-minute. And then, of course, the usual problem with this. But SMCI's fall from grace now down to 18. Now, they are a huge customer of NVIDIA. And that should be a concern. And it's clearly not, you know, being touted as much of a concern. Will NVIDIA come in and save them? You know, will they give them some kind of lifeline, or that is not a happy equity. That.
Yeah, and for those of you holding on to your seats, I mean, I'm on Friday I was looking at selling puts to try and sort of cover my back as well with NVIDIA. But for those of you sitting tight until the actual results, what you want to look out for are key things that start with H. So in terms of the chips, H100, H200, you're looking out for Blackwell chips. Any discussion or comments at all about more demand for these Blackwell chips, which are faster and more efficient than traditional CPUs found in data centers? That is a bullish signal. Also, don't forget, like Rich was saying, make sure you cover your back, because NVIDIA shares, I think they've risen almost 200% already so far this year. Yeah. You know, the market cap is unbelievable. It's huge.
We did a quick exercise this morning. So here is your question of the day, right? Now, Boohoo sold some stock this morning, right? There was a bit of a cash raise in Boohoo. How many cents of the NVIDIA share price moves? So NVIDIA moves in 1 cent increments. How many cents of NVIDIA would it take to buy the whole of Boohoo company?
I know you did the math.
Yep. I've done the math, and it's quite eye-opening. So yeah, drop us in the comments if you can work out how many cents of NVIDIA's share price would take to buy the whole of Boohoo, 100% of the company.
I can tell you he's done the math because he was next to me like a squirrel this morning. Other things out this week, also we've got Walmart on Tuesday, earnings before they open, and also Lowe's, their shares up 21% this year, also reporting on Tuesday. Those of you that trade pharma stocks, I quite like farmers. I know you don't like them because it can be quite volatile depending on what they say about charts and things.
I like farmers.
Farmers.
Feed me well.
Farmers. You've got Medtronic out on, I believe it's Tuesday. And then we've got Wednesday, of course, that big NVIDIA number, but we also have TJX and Palo Alto Networks. And and then we get NVIDIA's, and then coming in the back right now are the retailers, right?
And then, of course, Imperial Tobacco in British land here on UK shores. Yeah. Should we take a quick look at the newspapers? So here is the Financial Times, of course.
Hi, everybody. Welcome back. It's another Rising Star shoot. I think you guys are going to like this one. Something a little different. We are going to explore two things that we don't usually do on Rising Star shoots. Number one is we're going to talk to somebody that's gone from being a retail trader to kind of somebody that's stepped it up to being a full-time gig. That's one thing. And the second thing is somebody that's also taken a lot of the Tasty Trade mechanics and adapted them to a zero DTE type of trading style. And somebody that trades 100 to 200 times a day, somebody that trades very aggressively, kind of a style I like a lot. And so I'm excited to have this conversation and learn more about you.
Me as well.
Get your helmet on, as we say, because here we go. So you're 30.
Yeah.
When did you make your first trade?
I made my first trade in 2017, 2018. It was basically, I'd read some Warren Buffett stuff. My dad had been trading options for a long period of time. He introduced me to the concept of a covered call. So I started playing them on Facebook a little bit and was interested in the financial markets kind of through my dad and learning about that as well.
So 2017, 2018, kind of a pretty strong market, low volatility, strong market. Definitely at that point, probably anything that you bought went up.
Correct.
And you sold some calls against it. So you're like, oh, this is easy peasy. So let's talk progression. So you're kind of just starting out. What were you doing how were you supporting yourself?
I was working in construction as a superintendent. I was predominantly doing kind of like sensor manufacturing and drug manufacturing plants in the Bay Area alongside hospital construction.
Okay. So construction, that was your undergraduate degree too.
Correct.
Got it. So, so you're kind of doing what you had prepared to do. And did you get bit by the bug?
Yeah.
Or was it slow or just get bit?
I realized very quickly that what I had signed up for in college and what I thought was safe was actually risky in turn by doing the same thing that everyone else was doing. And kind of, I was affected by the upward drift in financial markets, whether I liked it or not. So I had a lot of time commuting from work and started to just pick up on podcasts and such like that, which is where I rolled into you guys.
You know, it's funny. Sometimes people, they roll into us because it's like, it's something that you feel like you have a little bit of control over. And a lot of times there's some disenchantment out of school where you think, oh man, I just lost control of everything.
Yeah.
Like, I don't control my own destiny anymore. And so they end up with us because you're thinking, well, this gives me some control back.
No, definitely. And the way you kind of speak to it is, here are ways to extract Azure why we think it's present. And here's data that basically backs that. And that really resonated with me, where it's like, here's a construction drawing I'm looking after. Here's what makes it structurally sound. And when we follow this, we usually get our output.
Are you kind of like a little bit of a math geek or an engineering geek a little bit?
Yeah, I think everything really comes down to the details of it. And I'm a big advocate of the simpler it is, but the more depth you understand all the concepts around it. That's what true mastery is, and kind of the way you guys explain those concepts, I think, is a good emulation of that.
So quantitative finance just made sense to you. Like it wasn't something that seemed very foreign. It seemed like, oh, I can figure this out.
Yeah, it made sense basically from day one. And then what really made it click was when I realized the quality of your assumptions around that is really what it gets into. And when I started tracking everything and inputs and outputs, I kind of related it to test, trade, track, and be curious.
Yeah.
And that is really kind of the formula to seeing what fits you and then optimizing your strategy for conviction instead of return. Yeah. So you can follow through with that and get what you bought.
So 2018, 17, 18, 19, whatever, when you're first starting out, you're obviously working, you know, you goes into the pandemic and you're still, I'm assuming, trading a little bit on the side, investing a little bit on the side, working your butt off in the construction, you know, engineering side of the construction job. And then what happens?
Yeah. So at that point, I think it was like most people, where you're trying to put in 10, 15 hours a week in trading, and then you're working 60 hours a week. Yeah. And you're asking mild success. You get in a meeting, you know, trying to have a life too, everything. Yeah. It's the buzzer goes off when you're in a meeting. You're like, that's not okay. And then I'd made it through COVID relatively okay, because, you know, I'd taken some positions off. Sure. But then I'd gotten laid off. You know, I was in construction. I was building skyscrapers. At that time, it was no longer needed. And I basically decided that day that I was like, I can do this. I believe it. The difference is, like, I have complete control over kind of what my destiny is a bit.
Yeah, sure.
And I started to, again, find another job, but really go all in now and kind of put my job almost as a second priority and trading as the first priority. Not advice I'd necessarily lend to everyone, but that's when it really clicked for me.
It's the kind of thing where if you're not going to roll the dice at that point, when would you? There's no risk to you at that point to just say, hey, let me give this a try, because the downside is, all right, I start over anyway.
Yeah.
And the upside is maybe I figured this out. Maybe my timing is perfect. And maybe I'm just entering the space at a time when, you know, they need 25 and 26-year-olds that are strategic, that can understand a different road through finance.
Yeah, and I like that you bring that up too, because one thing that I kind of related to it when I got into it, there's obviously compound interest, which is just making money, but there's also the concept of compound knowledge. Whereas if you start something at, of course, 24, 25, and it really gets rolling, it's a hockey stick return on your ability to learn at that.
It is very hard to impress upon people how important longevity is. Just, you had to play the game. You know, I mean, Buffett's probably the greatest example, because it may have taken him, you know, 50 years to get to the point where he could create some kind of exponential return. But it's all about longevity. And I think at 25 or 26, it's very hard to envision, it's very hard to consider longevity because you want instant gratification.
Exactly.
So now you're, mid-20s and post-COVID, I'm going to fast forward some of the story for you. You made some money. You have a couple $100,000.
Correct.
Through real estate, through whatever else you've saved up your whole life. That's everything you got, right? You roll the dice with everything.
I can't remember because I've realized something new. I'm trying to get out of my YouTube on this laptop because we found whilst you're away, it has a listening function. So if my YouTube on the laptop that I use for the studio is on, if it hears me say your name or Isar's name, it suddenly puts on the volume.
Wow.
Yeah, so I can only use my YouTube here. It's kind of scary, actually.
Okay, so there's the week. So that's from Monday there. So wow, that really is a flat as a pancake, isn't it?
Right, I'm back.
Literally, tick for tick.
Yeah.
From last, we are unchanged from the Friday close of the 8th of November until now. We are absolutely dead flat in Germany, remembering that we now have that confidence vote. So my girlfriend went through the exact politics of Germany with me last night. That was, we hadn't seen each other for 5 days really properly, and we spent last night talking about German politics. So it's a confidence vote, not a no confidence vote. That's the difference. That's why it's taken so long. So I think it's December the 16th now we get the confidence vote in Olaf Scholz. There's, it's very unlikely for him to win that, but there is a crazy path to him winning that confidence vote, and that's if the far right party decide to vote for him, which is obviously, Ange, the far right party in Germany, that's a kind of scary place to go. So the left would use that against Olaf Scholz. So he does not want that to happen. So it looks like the most likely scenario is that we're on for elections in February in Germany, and it will be a coalition. And that coalition doesn't get going until May because there's all the negotiations. Not like the UK where you just get a 1-week negotiation and the new parties get up and running. It would take until May. So Germany hamstrung by their government for another 6 months, which is not great considering what's going on in the economy there. Right, it is time for us to go for a quick break, and we'll see you back for the opening bell.
Rise and shine with IG's new morning show, Trade Live with IG, covering all our UK product offerings, including our OTC and exciting new US listed products. Starting in September, join us every weekday from 7:30 to 10 a.m. for exclusive insights from our trade desk, expert trading concepts curated by our friends at tastylive, global guest appearances, and loads of viewer interaction. Regular platform feature highlights and up-to-the-minute market updates. From casual chit-chat to in-depth analysis, we've got your morning covered, live on IG.com, YouTube, and in IG's trading platform. Whether you're a seasoned professional or just starting out, there's something for everyone. Tune in, stay informed, and kickstart your trading day live with IG.
Fundamental analysis is a method of evaluating assets to assess what their prices should be. It's based on the principle that every asset has a real fair value, which may be very different to its current price. It assumes that markets will naturally correct to reflect these fair values over time. The aim is to discover assets that are currently underpriced or overpriced, then place trades to profit from the expected correction if it materializes. Now, unlike a technical analysis that focuses on price charts, a detailed fundamental analysis would look at everything that could drive future price movements. The technique is most commonly used to scrutinize the price of shares, where annual reports, industry trends, and a company's management team may form part of an overall assessment. However, fundamental analysis can be used to review the price of an asset. A commodity like oil, for example, could be evaluated on the basis of economic data, regulation, brand recognition, geopolitical factors, and technical specification, among other factors. But while fundamental analysis is often said to be more comprehensive than technical analysis, it may not give you the full picture. For one thing, it's generally only useful for identifying long-term trends, whereas a technical analysis can help find short-term opportunities. For this reason, it's often a good idea to combine elements of both types to get the most accurate view of a market's direction. To learn more about fundamental analysis, join IG Academy today. It's completely free and gives you access to dozens of trading topics.
Hey, welcome back. Welcome back, everyone. Rich is here, and I was just teasing him about the chair. He's got the Hamlet chair.
So you'll just see me gradually go down over the next 10 minutes because the spring's broken. So let's see how long that lasts. Right, pre-market indications. We got Deutsche Telekom looking down 1% because Chinese hackers allegedly infiltrated the T-Mobile network. Ange, what you been up to? Then we've got miners up 1%. That's because from strong iron ore, with rebar and copper also looking higher as well. And then oil majors slightly higher, just with obviously WTI. Oil not moving as much as it possibly could have. That looked one on the open last night that was certainly in play. But oil currently only up 35 basis points. I would have thought we'd see a bit more of a move than that. Gold up 75 basis points, 2582. Rolls-Royce looking up 1%. ICE selling micronuclear reactors for space missions. What? We're taking a nuclear reactor into space?
They're all very small ones, though. I say this because I do like the design of the GE mini reactors, and they look like small silver. This sounds weird, guys, but when you spent a chunk of your childhood in the tropics, they look like it's actually quite beautiful. Cockroach eggs, but silver versions. So if you've ever seen cockroach eggs, they're actually very, very Fibonacci.
Wow.
And they've got this conical shape with lots and lots of lines, but it's silvery. The GE ones, the mini nuclear reactors, are small and shiny, so they reflect the environment. So you just see green. And apparently this is the way forward if you want to, really meaningfully stop global warming. There's the same things that they're shipping up there, right?
Yeah. Okay, so Rolls-Royce up 1%. It reminds me of the Attenborough program on BBC last night. It was incredible. Can we please make David Attenborough into an AI?
He's already one, isn't he?
Yeah. So Vistry down 2%. That's the questions. The weekend press on Vistry. Oh my goodness. Questions arise about the chair and CEO Greg Fitzgerald's extracurricular money making. That was a story in the Sunday Times. And then we have upgrades, downgrades. Have we got time for this? Yes, we still got 1 minute to go. So Generali raised to €31 target at Citigroup. We've got Morgan Stanley talking more selective on Central European and Greek banks. That's an interesting one. And producer Fred saw the stories on the insurance companies and Vistry. Yes, there was a Barclay downgrade in Vistry. And also there are some around in insurance. There we go. Generali raised to 31 target at Citi.
You mentioned Boohoo.
Any more interesting ones, then we'll come back to you on that. But we get the old morning bell ready. This is our new toy. So we got 10 seconds until this open.
4.
Here we
3,
go. We ready?
2, 1.
Wait, my new favorite toy.
Great. So we're off, and it's looking slightly mixed at the moment. US tech and Wall Street mixed, just settling right there. FTSE flat to slightly higher, really flat to be honest. And the Germany 40 also flat there. Also mentioning producer Fred earlier on mentioned Boohoo. Let's just have a look at that for you. It's flat. They raised around 0.4 million sterling from a retail offer. I believe that was right for 0.4 million sterling. Let's have a look at Vistry to see whether there's any movement there at all after Rich's update.
Down 0.8%.
Yeah, there we are.
Moment. So quite a small
Okay.
move. Right, let's have a look at the whole board, please, guys. So you see Burberry, they're up 1.2%. Wow, that was the one from Friday, wasn't it? Well, big strategy update there. Saw that at the train station, was up 10%. Was that right? 12%. GSK bouncing. So GSK weak last week after, of course, Robert F. Kennedy's appointment. So that's up 1.1% this morning, helping the FTSE. We've got, as you said, EasyJet now in the 540s. And let's do see what's on the downside there. For Expo, down 3%. I guess because of the troubles in Ukraine over the weekend, and of course the long-range missile efforts from Biden.
You just check Rightmove for me, because Rightmove, there was a story earlier on about asking prices for British homes, showed a big November dip, but 2025 apparently set for gains there. This was actually from a monthly report through Rightmove. Prices fell 1.4% over the 4 weeks to November 9th, compared with a typical drop of 0.8% for the period.
Okay, so up 1%.
Cool.
So yeah, not too big there,
Not
610,
big.
but you know, could be about to get out of that range that it's been stuck in. House prices down 1% this morning, I think they were. Right, miners up 1%. So we're starting to see a bit of the moves come in the mining stocks. Anglo's up 1, Glencore up 1, Rio Tinto up 80 basis points. Thought iron ore was a bit stronger than that, actually. Surprised that it's only, but I don't want to jump back in after the worst thing when you come back from, dare I say, holiday. Not sure it felt like a holiday, but yeah, coming back from
need
holiday.
a holiday
The
now.
worst thing to do is jump back in and start trading straight away, because there'll undoubtedly be things that I've missed in the last week, 100%. So I'm just going to sit back. You know, I was running a few things while I was away, but not going to jump back in. Rheinmetall up 1.5%, of course. How's that British BAE doing on your end? 'Cause of course, that's the one that we were debating.
We were. It has been quite volatile. This is the daily chart there. As you can see, it
Oh
had
my God, it did come. Oh, why wasn't I short?
Yeah, it did come off.
frustrating.
So I think Rich knows now how Ange likes to trade, because he has these like 4 p.m. Updates from me. But I like to,
Yeah, absolutely.
I like to come off quite quickly once you have the impact, right? And actually, we saw that big rise. This is a daily chart, people, after Trump's win. But as per always keep an eye on it, because you want to
once it
come off.
failed.
Yeah, and once it tails, can you see that there? If I show you, sometimes the 10-minute chart, you can really.
Oh, that's really frustrating to
Yeah,
that was such a conviction view, and I've just.
And it will come back down. So, for example, the not Covestra, what was the other one that I was looking for? Core Civic. And
This is one of those examples that it was clearly put in a basket
Yeah.
of election winners, and people just blindly buying the basket, that it took stocks up for absolutely no reason.
Yeah, there you go. This is Core Civic daily again. So as you guys know, Andrew Dack went with the defense stocks. I went with the prison builders, the prison infrastructure builders. So did say on air, this is not one to sit on. You go into the trade, you come out of it after the first reaction. Just get out of it, unless you're late to the game and you want to buy the dip. Basically, you're late. You can still get into the trade. Just go the other way. And as you can see here, it has been correcting. This is the daily chart there for you. And I believe with a lot of these stocks that weren't sort of Bitcoin, whilst your way Bitcoin ripped higher.
Oh, geez, don't you worry, I didn't miss that.
I know that's
It's an interesting one there, actually, just on Bitcoin. Everybody's been waiting for 100,000 Bitcoin for what, 4 years, right? It's always the number that people kept on saying, because they love a round number. So imagine how much Bitcoin there is to sell around the 100,000 level.
the bag holders.
Yeah, exactly. So I've got some of the ETF, right? I've got the ETF in my stocks and shares account. I'm obviously not going to sit at 100,000 to sell that. I'm going to sit at 99 or 98 and a half, because of course the resistance at 100, I would imagine, just from people talking about it for so long, is going to be huge.
Yeah, not
so
just
never sit at a level, come at least 5 cents under it, something like that.
Totally. And if it's not, Rich is absolutely right. If it's not the bag holders, there'll be the algos that will hit you. So try and make sure that you have a prudent limit in place. Just checking Whitbread as well, because I saw in passing that there was an article in the Daily Mail, actually. Premier Inn owners got plenty of room for growth, but not much of a move there. As you know, I like Whitbread because I understand that business model. AstraZeneca, another one. Don't know whether there's a move, but AstraZeneca, the Tagrisso drug used for lung cancer.
Now, this is one I've missed while I've been away. What's been going on in AstraZeneca? That looks down a lot from when I last looked at.
Yeah, it has been down quite a bit since.
This was the
September
Chinese.
high. Yeah. Remember there was a probe going on.
Yeah.
Yeah, and just before you left, there was a probe going on. So that hasn't been resolved yet, but it's actually moved lower, even though there were reports that its lung cancer treatment has been recommended for approval in the EU.
Yeah. So it tried to bounce and didn't get away. Right, let's look at your comments here. Michael Anthony, thank you very much for those stories. So he's looking at Pfizer and Nissan laying off 9,000 people. Wow. We're getting some compliments on the bell. It's a proper looking bell, Monkey Man says. He's happy with that.
All 15 quid of it.
16 pounds on Amazon. Yeah, very happy.
No buy now, pay later. He paid in one go.
And Naked Johnny. Have we had Naked Johnny on before?
I don't think so.
Welcome to the party, Naked Johnny.
That brings very
Never thought I'd be
strange
saying that in my life.
images to.
He's waiting for cars with uranium that don't need to refuel during their lifespan. Think what was Doc's car in Back to the Future?
Oh, I love that. That was a DeLorean.
Yeah.
And yes, I have been in one.
But it was run with uranium, wasn't it?
Banana peel at one point. That's when I remember he was stuffing a banana peel in.
That's yeah. Well, we're not like bananas in this studio anymore.
We're not. Producer Fred has a physical reaction to bananas. Monkey Man.
Right.
Just checking on Pfizer, because I like a pharma stock. Just checking to see, because you said he was looking at Pfizer.
That's right. Yeah.
Did you say why?
Closed under $25.
Yeah, it has broken past that resistance there of $25. So that is interesting. If we see support. Sorry. If we see further legs down, then it could break lower, but I'm looking out as well for perhaps maybe a bounce there if there's one to be had. Look at the volume as well down at the bottom of my chart.
This now Eli Lilly was one that I was looking at before I left. So let's have a quick look that as well. So there has really been winners and losers the past week, hasn't there? It's quite incredible. Those in Trump's cap and Eli Lilly, Moderna, Pfizer, all suffering these big moves. Or Glaxo, AstraZeneca.
Look at Moderna.
We might put together a basket of all the stocks that have been, murdered, and let's see how those look compared with the winners, and then we'll do a relative of the pro-Trumps and those hit by Trump, and let's see if that changes and how it, because that seems to be the only thing that the market's trading on just now. Are you a pal of Trump or aren't you? But the story I saw over the weekend, which was fascinating, Elon is an absolute genius. So how much did he pay to voters? Was it $1 million per vote or something silly like that?
And also at one point something to Trump's campaign, right?
Yeah.
Yeah.
What, billion?
Yeah.
But
Crazy money.
why was he doing it? Well, now we see, because if he is elected to the Economic Council, right, if he's on Trump's Economic Council, then as we found out with one of the ex-Goldman Sachs employees who became Treasury Secretary, if you're on the Economic Council, you do not pay capital gains tax. What's Elon's capital gain on Tesla? Probably about $120 billion. So the problem being for Tesla shareholders is that Elon has every incentive to sell down some of his stake in Tesla, because this is the time period until him and Trump fall out, he can get away with paying no capital gains tax on $140 billion of Tesla stock. So yes, people have bought Tesla and it's gone to the moon, as they would say, but beware the selling pressure there as Elon divests some of his stake potentially in the future. It's not all roses and, what's that phrase? It's not all
Coming up roses.
It's not all coming up roses.
Not all coming up roses.
Yeah.
But you're right. And, it might be the shiny new thing now, but Trump is renowned for falling out with, people after a while, after you're not the shiny new thing anymore.
And it's not like, Elon's some small, ego that's not going to be, that would be a yes or no, sir. He's very strong-minded. Okay, let's take a quick update then. The autos also doing well this morning. So BMW up 1.6, Mercedes-Benz up 1.1. So German autos getting a bit of a lift. Burberry, we see kick on now up 3%. That's higher than it was when there was the bid rumours, isn't there?
I think so.
Wow.
Yeah.
What a breakout on the...
See, if Burberry Ange had hung on for this long, but I couldn't have hung on for this long. That'd be crazy.
No, especially when the bid rumours were denied, right?
Yeah, exactly. So I'm glad I came out of that. So people out there listening, always make sure that you have an exit plan in place. And I exited Burberry even before China Tuesday, because I didn't want to when you're starting to pray or cry over a stock. It's time to get out.
Let's get Axel to look at that one, because that is really interesting. You see, we've got a gap there as well.
And in a technician's world, it always tries to close the gap. What is that, daily? Daily chart.
That is, yeah. Now, not one that I know much about and not one that I have traded, but it did catch my eye, and that's we've got, of course, British Land coming up this week. Was Land Securities. So Land Securities had a good set of numbers last week, and you saw that jump.
It moved higher on the was it Thursday? I can't remember. Was it Thursday?
You're right. Yep, Thursday. And that's interesting, isn't it? It's because, of course, this thing has sold off over quite a long period. There's a lot of doom and gloom about the UK, but coming out with those good numbers, that's another one that just caught the eye. But as I say, haven't traded that one for a while, so that's one I'm going to do more work on. It's having looked at only really options all week and been trading that, and I've obviously got a completely different.
You got the ding in your
now.
ding in your.
No. Because it didn't work on Friday.
Oh, did it not?
We had some IT. There was 2 IT issues during the week. We lost Wi-Fi intermittently in Manchester.
Okay.
And that really peed him off, and I can see why, because it wasn't updating the positions. So we couldn't get orders through as quickly as we were on Thursday.
Yeah.
But we also, it wasn't updating the correct position. So that was a small Wi-Fi issue on Tuesday, and we only got 24 trades done. But then Friday, of course, Tom's walking around with a microphone, right? So he needs to hear that we're done.
Yeah.
Or I shout out, well, you know, done, done, done.
Yeah.
But
Filled.
filled. But there was no bell. So that was the one problem.
I am a huge fan of the bell, by the way, because the moment it went ding, I mean, Tom's right. It does get your mind, you know, worrying straight away. But also, my 9-year-old who was there and met loads of our trader friends immediately went, "What's going on?" You know, like a like a meerkat. What's going on? What's going on? And she was following the trades as you were pushing them down, and she was asking me, "Mum, how come that's not filled yet? And why is he?"
Really
Yeah.
brilliant. Oh, she's a sharp one, isn't she?
But actually, on I have to say, the weekend, that Phil and Caleb were horrified, and I said I would tell all of you why. My weekend was harder than you being away, and you being away last week was so tough.
Oh.
So at the weekend yesterday, 5 9-year-olds, 2 adults at Go 8 in Battersea.
Oh, wow. That is a hectic afternoon.
And 5 of them in our car, right? So we were driving them there and back. It was, this is like heaven. This is heaven. And the conversation in the car, you will live in her mind forever, Rich. You are like, you know, like seared into her mind, because she's like, I did this last week. And then the kids then went on to, my daddy does this. My mummy's job is this. So Emma then proudly said, my mummy trades gold. And then the kid then went, her friend then said, where do you keep this gold?
Wow, I hope she kept that a secret. And let it out.
But talking about European markets, I'm just seeing on my list here, builders getting kicked. I mean, I put Travis and Kingfisher just because I want to see the relationship. Those obviously not house builders. But take a look at my screen. Barrett, Taylor, Bellway, Crest Nicholson, all getting all lower. Actually, they're not as bad as earlier before, but they are all in the red there. So that's one to look out for. I wonder, it's really interesting. Maybe the whole kind of reports earlier on about how house prices might be improving, the outlook is improving. Maybe investors are not buying into this, you know, picture. Things are still really tough out there.
Yeah, very tough indeed. But not for Naked Johnny. Naked Johnny is still laughing at how close a call it was to seeing me almost get fired on the live show. And this was particularly in Birmingham, where I had, of course, if for those of you Tasty Trade viewers, then Tom's right-hand man is Tony Batista. So little did he know, exactly. Little did he know that I had a T-shirt with Team Tony written on the back underneath my shirt. So halfway through Birmingham, I removed my outer shirt and said, oh, Tom, I tried to get a T-shirt printed up, but it looks like they spelt your name wrong. And it had Team Tony on the back. And it says, that's a sackable offence. So that was good fun. Yeah, we've got RC also mentioning that the US 100, the NASDAQ, massive bounce from the 2-day VWAP. So that's going to be one to watch, because of course that 2-day sell-off in the NASDAQ has been extreme. Down 500 points one day on Friday.
Wow.
That was...
I'm watching with interest. Why does Naked Johnny say greetings from Finland? Are you from Finland, Naked Johnny?
Aha!
Are you from Helsinki?
Brilliant. Our Finnish friends are in the house.
Are you from Helsinki?
I had breakfast with these guys on Saturday. And they both previously work in banking. Naked Johnny, great to have you in the chat. Now,
Is that why? Because if he's finished and they have all these saunas up there and they're completely naked. I've worked in Finland. Is that why?
That's very, very wise of you putting those 2 and 2 together. But yeah, this putting everybody's names together with who they are. R6 the easiest one, because our friend Sax actually had R6 on her badge. There's Flipper Boy, So remembering everybody's YouTube names and their real names.
Yeah.
But Neil, I still remember you. Don't you worry. So yeah, he has mentioned and asked, has my portfolio changed over the last week? I will give you a look at that.
Mine has.
We'll do that. That's a question for confirm and send. So let's go to confirm and send.
Yeah. Welcome back, people. This is my favorite part of the show where no a question is too difficult or too complicated or too crazy. We will answer it here. It might take us some time, but you go into producer Fred's queue. He says no queue jumping because I tried to answer Tiffany's earlier last week. It was like, oh, there's a queue, there's a queue. So we will get them answered. Just be patient. Just be patient.
Producer Fred said, I didn't say that. For those of you that were in London, you got to meet producer Fred. He just had his sticker Fred on his shirt. So I was like, no, you are producer Fred. So we'll have to get the picture up later, won't we, Fred?
He said something quite polite just now. But Emma calls him Mr. Beardy. And he has a handsome beard. Right, so let's get to our first question.
All right, can we use trading volume to predict price action trend, Angeline?
Right. We talk about this quite a bit. Volume is everything, right? If you've got no volume, make sure that the instrument that you're trading is very liquid, because that is perhaps one of the most important things, and we cannot stress that enough here. However, I can't really say that I look at volume to predict price action, specifically price direction.
To confirm,
yes,
is a good one.
But you can't predict, can you?
No.
You can confirm, and we talked about this quite a bit whenever we talk about trades. I keep up my volume to see whether or not, for example, you see a lot of volume when they're selling, right? People unwinding the positions. And if I know that I call them legs, they're actually candles. If it's continually going lower and volumes are rising into that tick lower, that's a good signal for me that selling is continuing. What do you think, Rich?
Yeah, well, to put it more like, let's forget the stock market for a second. Let's forget financial instruments, and let's just think there was a room of 5 people trying to guess what could we be trying to guess? How many bananas are produced in Costa Rica every day, right? Now, if there's only 5 people trying to make guesses, then the chances are your guesses could be way off, right? And the sum of the total of those guesses could be way off. But if there's 5,000 people in a room debating how many bananas are made in Costa Rica every day or grown, then the law of large numbers, you're going to get a lot closer to that correct answer. With very thin volume, there can just be one huge seller distorting the price completely. But in a very, very liquid stock, you're safer in the knowledge that A, the chances are the correct market price is something that it should be, but also B, you'll be able to get in and out depending on the size of your position very, very quickly.
Yeah, and a good example of this, if you whack up my screen, I'll show you my Trump list that I was looking at just before the result was out. There you have it. I put a position on Geo Group. But if you look back, what I'm looking for in a Geo Group is basically adding that to Workspace.
And
this is the daily chart.
Higher? Ange, hats off to you.
That is the daily chart
of the year.
Geo Group. And also I went over and told the PCMs as well and the trading desk, I said, this is the most unheard of stock, because which fund manager, tell me, Rich, which fund manager is going to stand up at a dinner party and go, I invest in, no one, right?
Prisons.
US prisons.
Just a reminder, for anybody who hasn't heard of Geo Group, it's the US prisons.
Yeah.
And funnily enough, that has benefited from Trump.
Because if you have a lot of people on the ground in the US, which I do, there is a real sense that he is going to carry through with, they don't call it prisons, and the key word now is processing centers, darling.
Wow.
Processing centers, right? And so they're going to, if he's going to go through with it, you're going to need a lot of place is built to process people. And I am looking, I've got volume at the bottom because when I was in this trade before coming off, I'm now no longer in this trade because I said quick in and out. What I'm looking at is for volumes to hold as this legs higher, right? So I wouldn't say volumes can help you predict, but they can certainly give you an idea of momentum.
Great. Right, question number 2. Let's move on quick.
Chop, chop, chop.
Can options get me cheap exposure to a market? Yes, they certainly can. Not necessarily cheap exposure, but defined risk. And defined risk being so important, people, because, you know, if you have open-ended potential losses, then we know those can be certainly can be a bit dangerous. But if you have a look at, for example, my positions at the moment on Tasty UK. So there, one question from Neil was, have my positions changed much while I was away? Well, yes, because the US obviously ripped, right? Now, forget that JP Morgan, because that is a rubbish trade. That was one that I put on just in case Jamie Dimon was stolen from JP Morgan and made Treasury Secretary. So I wanted a nice little cheap downside on JP Morgan just in case Jamie Dimon resigned as CEO. That didn't work, and so forget that. Nike. Now, Nike, you know, I was bearish on. I'm still bearish, but I do want to buy stock for long in the future. So just in case they popped up, I sold a 67.50 put, and I used that premium. Here's the trade price. So I received 69 cents, okay, and I used that premium to buy upside of the $80 calls to the 87.50 calls. Right, so that was me getting cheap exposure to that $7.50 because I only paid about 80 cents. Right, so you take that $2 that it cost me to buy the call, take off 70, take off 50, so that's 79 cents I paid for $7.50 exposure. So you get a 10 for 1 payoff on that for Nike going higher. And then similar in Uber as well. Uber's a fantastic company. I spend too much on Uber. This time I'm saying that there is limited upside only to 82.5. It's currently at 73. Right, so I sold double the amount of calls there. And so it's 119 minus 82 because I got double the amount of that 41. And then I received 32 for selling the 62.5 put. So that cost 0. So I have 0 cost to get into that trade in Uber, but I've got upside from 77.5 to 82.5, and I buy the stock at 62.5 if it drops another, well, what's that, about 12, 13%, which I'm very happy to do.
I like that.
Actually, 15% more.
I like that. I like upside with 0 cost. We have a question as well.
Exposure.
Yes, from Baby Gran as well, asking about SPY. And I'm just wondering, have you still got your position in where I think it was you were looking at 61.50 and 48.58, or have you closed out of that?
Yeah, but that's on a different account. So I've got 3 accounts. I've got an options account, I've got a stock account on IG.
This is coming from a guy that doesn't use credit cards.
Yeah. Two CFDs and one.
Yeah, so I think it was.
Right, here
memory serves me right. 61.50 people, 48.58 around there.
That's very impressive, Ange. But I have I bought back the.
Yeah, 48. Yeah.
There we go. I bought. So it looked like the US was going to rip. Okay, so I actually bought back some of I bought a 60-30 call for the 31st of December, right? That's my Santa rally position. So it's called a calendar spread. I think we potentially could go higher into the year end. So I've bought that 60-30 call. But you can see I'm hugely short the March calls around the same level, slightly higher. So I'm double the amount short there, trying to take in premium. So I think if we get a Santa rally, we do not go on to have an Easter rally, and that's left there. If you want to just go back quickly, you'll see that Vodafone, I'm essentially long 100,000 shares there, being short that put. I'm long another 100,000 shares there, being long that put for December. So I did just sell a little bit of the delta, waiting for them to stabilize. Now, thankfully, Vodafone has stabilized because it was a bit of a horrible.
No, Monkey Man was like,
there.
the McDonald pension. What's happening with the McDonald pension?
Yeah, you're not wrong, Monkey Man. I said on the show on Thursday morning to you, the McDonald pension isn't in Nvidia or in Tesla. It's in Vodafone and SSE. So it's we'll certainly be here for the long term. You'll be happy to hear, Monkey Man.
And
Won't
key
be going
dates,
anywhere.
people out there for
retiring.
Vodafone, December 7th and December 10th.
That's right. So big news coming December the 7th, December the 10th. We can be fairly confident on the CMA, on the 3 merger between Vodafone and 3, right? Because they've given the sort of pre-authorization for that. But that Italian regulator decision, that is so important with Swisscom.
Is that the 10th?
That's the 10th, yeah. So then we'll find out if we're going to get... But Vodafone stabilizing, very happy to... Because it was, well, in my humble opinion, seeing it down at 67 pence was just... That was a bit crazy.
Yeah, but it's come back now. It's about 70,
Exactly.
isn't it?
And that's where it should be because it goes ex-dividend soon.
Right.
Next
Let's
question.
hit us up with the next question, people. What are common pitfalls to avoid when implementing a trading strategy? Right. This is one I talk about quite a lot because, you know, when you're new to it, you get overexcited. One of the pitfalls is not having well, when I'm teaching my 9-year-old, I say, what is your story, right? Not having, same thing, theory, thesis, you know, story. It's the same thing. And with your story, you have to have an entry and exit point. You don't start writing a book without knowing how it ends. Same with trading. You don't enter unless you know how it's going to end or at which point you're going to leave or exit or re-enter or add to your position. And this is purely because it strips out the emotion which you don't want in your trade.
And that takes us perfectly on to Pega's slot this morning, right? Now, Pega, every time she passes, the studio is on the main trading floor here at IG. So we are on the walkway from the kitchen to HR. So Pega walks past all the time with her tea or coffee. And she says, Rich, why aren't you letting me close these positions? So we're building and building a portfolio, which I'm doing on purpose. And then next week, we'll actually start to put limits and stops and take profit levels in there. Because I want to make the mistakes obvious to start with, and then be able to show the mistakes as we go through. So yeah, the trading strategy, sometimes the best way to learn is from your mistakes.
Yeah.
Right. And I have many mistakes over the years burned into my mind, not just from my own sort of ego getting punched down to a pulp, but also from my bosses, Danny Kay, Chris Driscoll, Jeremy Benjamin, all very much being fantastic mentors along the way, but also Danny in especially shouting at me when I used to get things wrong.
I'd love to meet this man.
I'd love to get to the show.
Okay, so here's the other thing too. Lots of people asking, love technical analysis. I know Tom hates it, but it's not like the be-all and end-all. As I always say, it's a friend, right? One of the common pitfalls is whenever anyone starts, and I'm guilty of this too, get overexcited and then you put all these indicators, stochastics, you know, moving averages, and you whack up the volume, and it becomes like a mess. Don't do it, people. Do not do it. Just choose one or two that work. Don't use any on their own. And also, different ones work for different instruments. You don't have one size fits all here, right? No one's going to be wearing the same type of shoes because your feet are different. It's the same with...
I've missed you, Ange.
It's the same with technical analysis. The other thing to call out to our Sachs, who was lovely. She brought her husband as well. Did you meet her husband?
Oh, no, I didn't meet her
Yeah,
husband. I was too busy
Barbie.
chatting to...
Bobby was like, oh, so looking at her so adoringly. I was like, putting my, it was like following her around and helping her take photos and stuff. I think there was also Sonali, and they're asking me what I like to see at the end of my trading day, because they hear me talk about putting on trades, then they hear about my housekeeping, trading housekeeping, right, which happens around 3:30, 4 o'clock.
Yeah.
And then they say, and then what do you see when you come back, maybe at around 8:39? And I said, I want to see a blank screen. I want to see a completely blank screen on my IG platform, and because that means my stops and limits have worked. So I trade a different time frame to Rich. I like short term, I like taking profit on, I like re-entering very, very quickly. So I took this photo especially for Tiffany and Sonali. If you whack up my screen, the thing about the IG platform is that it does not show you sort of your history after a while, but I took this for the 15th of 11th.
Your P&L, look at you.
Yeah, so Palantir, I was in, and I was so tired because Rich wasn't here on Friday. I then really just absolutely passed out. I was so knocked out that afternoon. But Palantir is one to watch because I believe it's a 26 when they got a big piece of news happening. They're being added onto the NASDAQ.
Oh, really?
Yeah, it enters.
Wow.
And
Okay.
so I've been trading the blips up, if you like. And if you whack up my screen, when I came down after my sleep, I was knocked out for 3 hours because Rich wasn't here the whole week. Can you see that there's negative 12, plus 21, and then 210, and then 576? This is what I mean by small trades, but I want my alpha to be positive, right? Overall, I want my alpha to be positive. Once I've done my housekeeping, I want to come back, I want a blank screen, but most importantly, I want my alpha to be positive. You're not going to get all your trades right, but as long as they're more right than wrong, then that's
Well, talking about that, we can just pop up my portfolio as well. So Neil, sorry, you asked if my position. This is the main one that you see most days, right? The other one was my tasty, the other one was my options book, but this is the main one. You can see not much in there because, as I said, being away on the road, you don't like to run too big a portfolio. I just bought this FTSE over the weekend, actually, so you know that can go now because that was just. There was a headline that came out over the weekend that President Xi was willing to talk with Trump on a peaceful solution between the two. So I bought that over the weekend. Also bought this Wall Street Cash. That's why it's a random number. But yeah, looking for a bounce in the FTSE. Nvidia there, I am short the deck puts and the deck calls, but far out. So more like these 16 delta strangle there that Sosnoff talks about that I've learned on the week, but that was sort of came intuitively. So those are paying off nicely with a bit of just the theta coming out there. And I'm using that to do a bit of downside trading on the S&P, but that's for the end of this month. That doesn't look great so far. Yeah, and that's about it. So we've got Pega coming up.
amazing.
Shortly.
Do we have time for one quick question from Monkey Man?
Oh, wait, go on, because it's Monkey Man. 30
did I hear
seconds.
correctly? Rich has some Bitcoin in an ETF, but is that held within his ISA?
It's not in an ISA.
I've got Bitcoin up if you want to whack up my screen because it has been on a tear, people. I mean, it's now the 91839 handle, but it is just crazy, crazy town. And I've got 940.79 there just so that I can see clearly if it punches above this, because if it does, then I think 100K will be well in sight.
Yeah, so this is my position. It's in, so IG do a stocks and shares account, right? So no leverage, and I don't trade Bitcoin on leverage, right? Because that is just too dangerous.
Too volatile.
So on stocks and shares account, I've got this iShares Bitcoin Trust, and yeah, that's been beautiful. So 38.50, but that's just a buy and hold. So there's obviously no financing because it's an ETF. But talking about positions, we're going to have a look at Pegas after this break. We'll see you in 5.
Hi, I'm Sean Mearson, Senior Market Analyst at IG, and join us for our new show, Charting Essentials. That's every fortnight on IG.com, our trading platform, as well as YouTube. And that's a show where we look at everything technical analysis, hoping to help you upskill, whether you're starting out or just looking to level up. We got you covered. In each episode, we'll break down complex concepts into easy to understand lessons, provide practical tips to help you sharpen your chart reading abilities, explore powerful technical indicators and their real-world applications, as well as guide you through hands-on examples to reinforce your learning. So come, let's work on our skills. Let's get better at this. Let's accelerate that trading journey, learn to have confidence to trade, and make informed trading decisions.
Trading the news is an essential skill for all traders. Major news announcements can often cause large price movements, particularly in Forex markets. So, here are 5 key pointers to help you try and make the most of those moves. 1. Do your research. Know the times and dates of important events. Use an economic calendar, for example, the one on IG.com. It's a vital tool to help you plan ahead. There are many announcements on any given day, and it's essential you know which will affect the assets you're trading. For a Forex trader, generally any event impacting the US dollar is important. Events like non-farm payrolls, Federal Reserve minutes, and GDP. If trading shares, look out for company earnings, dividend payments, and stock splits. 2. Check what the market expectations are for the event. Look at a chart of what happened last time. How did the market react? Was the data better or worse than expected? Did earnings beat or miss estimates? Use what happened in the past to inform your future trades. 3. Study related news and events. What else could impact the market in the wake of the announcement? Take crude oil as an example. US inventories are due on Wednesday. If there's an oversupply, the price should drop. But say OPEC ministers are meeting Thursday. If they reduce output, the price could rise. So, it's essential to look at the overall picture and not take each event in isolation. 4. Put a strategy in place. Know what levels you want to buy or sell at, and where to put your stop losses. This will help you to have the courage of your convictions and avoid knee-jerk reactions. And finally, 5. Learn when to fade the news. Here's an example. The CEO of Company X announces he's leaving. The stock falls, but you believe the company's fundamentals are still sound, and the market is overreacting. So, you hold your position. If you're right, and the price rises, you could profit. Of course, if you're wrong, and the price continues to drop, you'd make a loss. Remember, these are all just guidelines. While trading the news can be exciting, it is also risky. unexpected results can lead to high volatility in the market. So, make sure you're well prepared, and always have a solid trading plan.
And welcome back, everybody. So we are teaching Pega to trade. Just a reminder, this is our beginners investor section when we take Pega from zero to hero. Heroine. Heroine?
I think
You're happy with hero.
Yeah, comes from, you know, the classical Greek was a female originally.
Oh, I like that. Now that's good knowledge. Now, speaking about being a hero, do you play Risk, Pega?
As in the board game?
Board game?
Yeah, well, we have Risk Junior in my household.
Oh, that's cute.
So we're not quite at the 5-day board game level. I think that it would just drive everybody nuts. But Risk Junior is a really good game, and it's pirate themed. Arr.
With all the countries, the continents still?
Yeah, yes.
And how do you do at that? You good?
Well, you know, we're at that age with my son that you don't want to let him win, so you have to, you know, get in there and put in a full effort.
Well, in the real world game of Risk, Pega is winning because she's taken over the world. Pega has just received a promotion in IG. Tell us what your new role is, Pega.
Well, I'm moving from the UK division to APAC and Middle East. So I'm broadening out my world perspective.
So Pega's been rolling the dice and she's going from running the UK to expanding, and your army's going all across APAC and the Middle East. That is impressive.
So hopefully I get some good travel out of it.
Good. Well, I think you're going to need it after how your P&L's looking so far on this trading game. Today we're going to run through a recap basically of what we've done, because you had a holiday, then I've had a holiday. So let's just run through a recap of weeks 1 to 4. Then we're going to go through your portfolio. Today we're going to look at what are the alternatives to trading stocks, right? Because so far stocks haven't gone too well, have they?
I think it's that Delta one in particular seems to have been really dragging down our whole portfolio.
That's exactly, a bit of a crash landing there. So today we're going to look at foreign exchange and bonds and how we trade those on the platform. Then we're going to go on to have a quick look at macroeconomics, right? So it will be a real quick flurry into that. We'll go over it further in another week in the future. And then we're going to do today's trades of the week. Now, so the recap, right? Do you remember week 1 was very simple. Week 1 was just a sort of introduction.
About all the reasons that I should be trading. So that was about creating wealth. And we learned all about how if we invested not only some initial capital, but also the dividends, how I could make just a huge amount of money over a long period of time, although past performance is not an indication of future performance.
That's exactly, but that compounding effect, just taking a savings account over time, reinvesting those dividends, you're exactly right. We've got that huge compounding.
My colleagues made a meme of me saying, wow.
Did they? Okay, we need to get that up on screen. Now, week 2 was how to short stocks. Remember, we were throwing the rugby ball around. So that was how to short stocks, and we looked at pair trades. We put on EasyJet against Delta Airlines. The biggest trading mistakes were in week 3, and that was looking at when you're going to put the trade on. Do you remember we looked at, we need to know if there's earnings coming out?
Yes.
Have we got the size right? Have we got enough margin room? All those kind of things. And we put on retailers. Do you remember we put on what stocks?
It was Next and Kingfisher.
Exactly right. Kingfisher being B&Q. And then finally, in week 4, which wasn't last week, it was the week before, it was using valuation, the basics of valuation, and quantitative research, which is, we use the tip rank system,
Yeah.
which is my favorite tool on the IG platform. Absolutely love that. So, to today, my dear, and I did say we were going to look over that portfolio. It's just been a bit tricky, hasn't it?
I think I have wanted to cut at some point, but we agreed we would keep going.
Now, did you hear what I said to Ange there just before you came in? So, obviously, the most important thing in risk management is position management and having a stop loss and having a take profit level. Okay, now I wanted to really get that across and really drive that home. So this is actually perfect that we've lost a bit of money. If we can get this portfolio up, you'll see that Delta Airlines should have been gone a long time ago, right? Because that's a £5,000 position and we're losing 1,200. It's been horrific.
And it's most of the loss is from Delta.
Pretty much. If we took that out, right, then you know, you'd be pretty much flat. Okay, there's a little bit there from Intercontinental as well. You've been unlucky there, but you're right. The vast majority has been from Delta against EasyJet. Now we would have been stopped out of that if we had been disciplined and taken the stop loss, but haven't let you do that yet. Because next week, we're going to do a full look at stop losses, taking profit. How do you get that risk to reward ratio?
Okay.
Okay. But for now, we're running these 8 positions, and I'm very happy with the way that it's going. Forgetting the P&L.
Learning a lot.
You're learning a lot. And I'm very glad to hear you say that. So, what do you think of that so far? What do you think of the way that it's set up, the breadth of the positions? If we just want to throw that up again, please, guys. So a reminder of what those trades are. Do you want to tell everybody what the pairs are?
Yeah, so the first pair was EasyJet and Delta. And I think that, you know, some things have happened in the macroeconomic sense.
What would you say has happened in the last couple of weeks, and especially Pega?
Well, in the US, we have a new president-elect.
Oh, right.
An old president-elect, if you will, a return of the president-elect. Yeah. And that, I think, has really helped some stocks in particular. I think Delta, which relies heavily on jet fuel, and I think the frack baby frack mantra is probably helping out their share price in particular.
Now, I'm going to go out on a limb and say perhaps maybe it's not the ideal result that some people, I'll keep this general, some people, you know, you being American as well, and certainly, you know, we won't go into it too much. I don't want to you know, tie you to a political party live on television, but the reaction in the dollar has been absolutely incredible.
Yeah.
Right. We've seen this huge dollar strength. It doesn't mean that it's necessarily a good thing. It doesn't mean that America is rejoicing in the victory. But if we have a look against the pound here, in particular, Pega, right, since the election result, then let's see if I can just get this tied in a little bit to show us. So that's a daily chart, right? Now the GBP dollar, which I'm sure you look at, has fallen from 134 down to, then we had the budget in the UK. So you're talking about macroeconomic occurrences, right? This is where the budget was here, and we dropped down to the 129. Oh, sorry. Yeah, I'm a bit ahead of myself here. This is where the budget was here. We dropped down to that 129 level, And then that's been exacerbated in that move by the US election.
Yeah, I hope you don't have any holidays to the US plant.
Well, I was hoping that, you know, Sosnoff might invite me out to Chicago at some point, but yeah, we had such a great week last week that I definitely hope. But producer Fred, I see him quaking in his boots already, saying he's just had a week's holiday. He's not allowed another one to go to Chicago. Yeah, so in 2 weeks' time, we're going to be looking at technical analysis.
Okay.
Right? But as you can see from this, from a simple technical analysis like the RSI, right? I'll give you a quick introduction to it here. So we can put up this, what this gives us is an idea of how the momentum's been and oversold or overbought. And if this indicator here is below 30, that's regarded as the instrument being oversold.
Okay.
Okay. So, as a stick it to him to Trump, and as a backing the UK, which you did 20 years ago when you moved here, how do you feel about putting on a small reversal trade of the pound against the dollar?
So you're suggesting that I bet against my country of origin, my home, for the first 21 years of my life?
I feel the national anthem coming on. Can we get that in the background, guys?
The Pledge of Allegiance.
Yes, Pledge of Allegiance.
Well, I think that this is a good lesson because up until now, I think maybe some of the bets that we made were a little bit emotional in nature. So they were things that were maybe more focused on my personal experience of flying or my personal experience of
shopping
and of home decor. And so one of the things that I've learned is that I need to be more dispassionate about my trades. And so if we think that this is the right, logical, objective decision, then I think that we should go for it. We have some ground to gain.
Wonderful. I'm very happy to to hear that, you know, that movement from day one. We came in here and I said to you, right, let's go through the different airlines and the different, and now for you to hear you say, well, it doesn't matter necessarily about my personal experience. That isn't always the way to make money. It's definitely an indicator. It helps.
Yeah.
It helps frame your mind, but you're absolutely right. It's about making money. It's not about your personal emotions of, you know, back in America, even though America now has that new president-elect.
Yes.
Right, so we're going to buy the British pound against the US dollar, right? And you're going to do that at 126.17.
Okay.
For 0.5 pounds per point, or 50 pence a point. Should we go ahead and lock that in?
Let's do it.
They're moving the market against us already. Look, it's about to go 126.20 bids. There we go. Right, so we're long a bit of that. Now, the other thing that's had a huge move, and we can have a look at treasuries and the bond market.
Okay.
Right, so you've got corporate bonds and you've got sovereign bonds. And sovereign bonds are how governments finance their budgets, right? Now, what do we know about Trump's policies with regards to the budget and how that deficit's going to look?
Well, traditionally, I guess in the past, the deficit has gone up. Under him, I think we're doing national bonds, not like local government bonds.
That's
Is that
exactly,
right?
yeah. US Treasuries. So the one that I'd like to take a look at is the 2-year, right? So that is an average of the predicted interest rate path over the next 2 years.
Okay.
Okay.
So, yeah, I think that we can, look at if we look at the previous time, which again, like stocks, doesn't necessarily tell us what's going to happen in the future, but the deficit did increase.
That's right. So it's not just drill, baby, drill. It's spend, baby, spend.
Yeah.
Right? Now, 2016 was a completely different scenario, right? We had absolutely no inflationary pressure at all. If anything, and if you think of inflation like a balloon, if anything, we really needed to pump some air into that balloon, or a rugby ball, right?
Yeah.
The rugby ball was flat. The economy needed some real push. At the moment, right, we've just come from that rugby ball or balloon being at breaking point, and we're just starting to get the pressure released. We're still not down to the Federal Reserve's target of 2% inflation, right? Inflation being the price rises over time. So now the worry is that Trump comes in and he pumps the economy, right? Because his thinking is, let's get this economy going.
Trickle down economics.
Trickle down economics, which have been proved by many an economist to be absolute horse dung.
Working well for the billionaires, though.
And this is the problem, is that it's just, you know, who benefits from this? Well, it's the ones with stocks, it's the ones with property. It's definitely not the 40% of Americans that don't have those, you know, hard assets. So if we can take a look at this, the bond projection, right? So this is from September. Now, the US economy is strong, and it's been extremely strong. And beyond belief, really. We thought high interest rates would cause higher unemployment and a growth slowdown, and it hasn't happened. So even though we saw rates come down by 50 basis points from the Federal Reserve, now the concern is that we're going to get inflation come back into the system, and we're going to get, you know, sustained economic growth. We're going to get sustained low unemployment. So Jerome Powell came out on Thursday night and he said, I don't know if we have to cut interest rates by as much as we thought we would. So you can see what's happened over the past month. As bond prices go down, and this is the main thing I want you to take away from this today, Pega. Bond prices are the inverse of interest rates.
Okay.
Right? So if you wanted to turn this graph on its head, this is interest rate expectations going higher.
So we expect the interest rate in America to go up, for the Fed to raise interest rates based on this.
No, sorry, I haven't explained that quite as well. So this was expectations of it over the next 2 years. So let me throw up a quick, if we can just come off the screen quickly. There we go. Here it is. So that 2-year interest rate is now, it was 4.299.
I see, yeah.
Let me update that this morning. And yeah, that's what it is. Oh, here we go. There's an offer for everybody. 4.2, so 4.3%. Now that was under 4%, right, before all the election and such like.
Okay.
So that's because expectations in the future were so low and that we would get a lot of interest rate cuts. Now we're not expecting as many cuts, so that expectation has risen. Am I doing that? That would be that way. Yeah, there we go. That's better. So this was about a month ago where interest rates were going to go to.
Okay.
But that's gradually risen because of Trump spending, because of how strong the job market is, because of how, the potential for inflation to come back in. So as the expectations of interest rates have moved higher, the bond price goes down.
The bond price goes down, and so the yield, which is the money that they give you,
exactly,
goes up.
Goes up.
Right? Yeah. So it was below 4, and now it's over 4. So I'd get more in my sort of like dividend coupon.
Coupon. That's exactly right.
Okay. Which is like a dividend for a bond. Is that right?
Which I know you enjoy getting those coupons, and you enjoy getting interest on your savings. You enjoy getting dividends.
Right.
So how about we get you some coupons?
Yes. I feel it's good to have a mixed portfolio.
Right, and we're certainly building that. So I thought, right, let's just have a look. So we're doing two contrarian trades here, right?
Okay.
Tom Sosnoff, all last week, every day, I like contrarian trades, right? So I've got that ingrained in my mind now, and that's why I thought today we'll have a look at selling the dollar and buying the 2-year treasury.
Okay.
So if we buy 0.5 of that, so again, 50 pence a point, the same size, that gives us a notional of just over 5,000. So the same as the positions we've been taking on everything else. Now, bonds tend to move a lot less.
Okay.
So how would you feel about increasing the size of this one?
To more than 5,000.
That's right.
Well,
Because the beta
yes.
is a lot lower than stocks, for example.
Okay.
You happy with that?
I'm happy with that. So
Right.
would we do
Permission.
10?
We'll do exactly 10,000.
Okay.
Right, so we'll go ahead and lock that in. 10266.8. We're buying you some bonds. We'll go back to your portfolio now and we'll see where that leaves us. Having bought GBP against the dollar, having bought the treasuries, you can see that now. Those two are in there. And yeah, fingers crossed, that is going to help the portfolio.
Okay.
Now, position management.
Yes.
We said that there are certain times that you want to get to that stop loss level, right? And not want to, but you want to have that stop loss. So if you get there, and we would have stopped you out of Delta a long time ago.
Yeah.
However, the other option is if you still think something's the right position, the correct position, and it's gone way too far. Now, a reminder, Delta has moved 24% against us.
Wow.
Right? 24% Delta has gone up against us. How would you feel about increasing the size of the position there? So let's have a look at the daily chart, right? That is the thing that you've been short, and we've been short from here. What about we increase the position and we go more short here?
Well, I would have waited until maybe we saw a slightly better result. But again, I'm going to be dispassionate. I'm going to think logically. And
you don't have to, just because I'm suggesting it. This is a very brave thing, right? And I'm not saying that this is the right thing to do by any means, because this trade's been shocking so far.
yes.
Right? And this is the one that would be keeping you up at night. So do you want to increase the risk in something that has, you know, been so bad so far? I know it's tough. There's no right decision here. I have been long a stock called ArcelorMittal.
Yes, the steel company.
The steel company, exactly right. And I was long $10 million of this thing, right, at work, not personally, at Macquarie. And the results came out, and the results were bad, and the stock opened down 10%, right? Now, at that point, you can be caught like a deer in headlights. I'm down $1 million in one day on this stock. But I had such conviction in my analyst. I had such conviction that we strongly thought those results were wrong, that I went in and doubled my position, right?
Okay.
So we were long 20 million, and it rallied, and it was only down 5% on the day, but our P&L was then flat.
I see.
Because we had made $1 million in this, you know, in this as it moved back. So sometimes it can be right, sometimes it can be wrong. I also had a boss that bought Northern Rock all the way down, and of course Northern Rock went to zero.
Yeah.
So that was a horrific. But is Delta Airlines going to continue going higher and higher and higher?
So I think Delta Airlines was pretty early in our learning
It was
journey.
indeed.
And so I think that some of the decisions that led us to short Delta were maybe in the early stages about personal experience rather than the PE ratio and some of the lessons we've learned since then.
That's right.
And I think if this was an elaborate game of poker, I probably would have folded. So
So you're saying this is our bluff and the bluff's gone wrong. I love that.
Delta is our biggest bluff. So I think what I would do is I wouldn't double down, because while I think that there were some good, sorry?
That's the response I wanted. Well done. We're not allowed to high five because it goes across the screen, but you deserve a high five for that
Thank
one.
you.
Very disciplined. That was a test, Pega, and you have passed with flying colours.
Excellent.
Therefore, you're allowed to come back next week. Even though now you are the queen of all the regions, would you have time to come back next week?
Yes, I'd love to come back.
Guys, thank you very much. Hope you've enjoyed that. Join us next week for Pega, but join us after the break. The fans' favourite. Yes, that's you, Axel Rudolph. We'll see you in 5.
Hi, I'm Sean Murison, Senior Market Analyst at IG, and join us for our new show, Charting Essentials. That's every fortnight on IG.com, our trading platform, as well as YouTube. And that's a show where we look at everything technical analysis, hoping to help you upskill. Whether you're starting out or just looking to level up, we got you covered. In each episode, we'll break down complex concepts into easy to understand lessons, provide practical tips to help you sharpen your chart reading abilities, explore powerful technical indicators and their real-world applications, as well as guide you through hands-on examples to reinforce your learning. So come, let's work on our skills. Let's get better at this. Let's accelerate that trading journey, learn to have confidence to trade, and make informed trading decisions.
CFD trading is the buying and selling of CFDs, or contracts for difference. As a derivative product, CFDs enable you to trade shares, indices, forex, commodities and more, without ever needing to own the underlying asset. When you trade CFDs, you trade the difference in the price of an asset from the point at which the contract is opened to when it's closed. As you don't own the underlying asset, you can trade markets that are falling as well as those that are rising. So, how exactly do you trade CFDs? Each contract has a buy and a sell price. Sell prices are slightly lower than the current market price, and buy prices are slightly higher. The difference between the two is referred to as the spread. If you think the market will rise, you would buy. This is called going long. If you think the market will fall, you would sell, known as going short. The more the market moves in the direction you predict, the larger your profits. If it moves in the opposite direction, the greater your loss. CFDs are traded on leverage, which means that you only need a small deposit, known as a margin, to gain full market exposure. So, if you wanted to open a position equivalent to 500 Apple shares, you might only need to put up 20% of the cost. Your profit or loss is calculated based on the full value of the trade, however, which could mean magnified gains, but also magnified losses. So, when trading CFDs, you should always keep an eye on the potential downside. Take care to manage your risk with stops and limits. Visit IG Academy to learn more.
Hey, welcome back. This is live from the trade desk, and we have the one, the only Axel Rudolph with us. Hey, Axel.
Morning, both. Thanks for the intro, by the way.
Honestly, Axel, I cannot tell you how much you are loved around the country. Every single place that we were in last week, somebody mentioned your name. They want more Axel, and they want all your analysis and everything. It really is appreciated out there.
That's good to know.
Axel was
Thanks
asked
for
where
that.
you were on Thursday, and I said that I tried to get you there on Thursday because Axel's also met Emma. Emma was there, but I think you had something on, didn't you?
I did indeed, yeah. Another IG gig somewhere else. Very busy.
No rest for the wicked.
Yeah, exactly. Right, speaking of no rest for the wicked, how was your weekend really quickly before I take you to something dear to my heart, which is gold?
It was nice. I actually managed to, well, I didn't manage to get tickets for the exhibition at the National Gallery in London, which is on Van Gogh. I learned you don't say Van Gogh anymore, but Van Gogh apparently.
Wow.
That's what the curator said anyway, but a brilliant exhibition, but you can't get tickets, so I had to become a member. One more membership.
God, well
It's really
done.
great, though. I can highly recommend it if you like his paintings. You'll see things that I've never seen before, and I've seen lots of his paintings over the years. So, yeah, all good. What about you two?
I am very pleased that Rich is back because last week he was away on the roadshow. And boy, I've never spoken so much in my life. So very pleased that he is back. But also,
I don't believe that for some reason.
and also, I had a really tough weekend because it was Emma's birthday. So 5 screaming kids in the car with me and my husband.
Was he screaming as well?
He was screaming. We were screaming. It was a lot of. We learned music that we did not have in our repertoire, like Dua Lipa levitating.
Oh, why am I
That's a
imagining?
great song.
It's a great song.
Great song.
but,
I love it.
I love it too, but I was just like, okay.
It's not what I expected.
Feeling quite old in the car. The other one is Trainor, Megan Trainor.
Have you seen the movie Step Brothers?
No.
When there's the 2 parents in the front and the 2 kids in the back, and they're singing a Queen. I think it's a Queen.
Bohemian
song.
Rhapsody.
Bohemian Rhapsody. I'm just imagining that scene, but Anne's been the one in the driving seat.
I was kind of like, please don't crash the car. Please don't crash the car. Yeah, so please, the weekend's over.
Right, Axel, what do we do? Charts must have blown out, have
I've
they?
got the gold chart here, if you want to talk us through that.
Yeah, it's just interesting because, I mentioned last week the 2,605 low, which was the low from a couple of weeks ago, and we went below there. The gold price having now dropped 8% from its all-time high, near $2,800 per troy ounce. So technically, for me, it's looking as if we're now consolidating, which is pretty annoying, basically, because just before the gold price hit its all-time high, I wrote a piece because I was asked to write an end-of-year forecast, saying it's going to go towards 3,000 in the first quarter of next year. And now, obviously, that looks less likely. So I need to adopt my my analysis and change my forecast, basically. And this just goes to show, you can know as much as you want about a market. If things change, you need to change your view. You can't just stick to wanting to be right. And what you just did, Rich, with Pega was really, really good, and she had the right answer. Do not double up when you're wrong. It might work for a professional because you've got that support that you were talking about, Richard, and you trade within very strict risk parameters anyway. But as a retail client, I would definitely not recommend buying into something simply because it's going against you, or sell into something which is going against you to the upside. So with regards to gold, I was wrong. Simple as that. I have to now readjust my forecast because the technical levels have been fallen through and the view has changed.
Also, whilst Rich was away, I became a gold bear. I have changed my view now. And for those of you that were watching on Thursday and Friday, I was shorting gold. Pete Ward as well said, wow, and you've really pivoted. So I've gone from Niffler to the un-Niffler.
Right.
And so ever since Trump got in, I'm kind of thinking, because of those levels which I've drawn out for you, and that 2605, the next level down that I'm looking at, 2563, it slightly bounced on that level, but it's failing to even touch the 2605 level, which gives me a sense that there are not enough buyers at the moment to push it through. How do you feel about gold in the coming year once Trump is inaugurated?
I don't. Because as you know, I look at charts and I don't know what Trump is going to do. We don't know what he's going to do with regards to tariffs. I mean, he will probably impose tariffs on some countries, but by how much? I mean, to be quite honest, in a way, and I would never have thought that I would say this, but I'm quite relieved that Elon Musk is part of his government or administration because he's a businessman.
Mm-hmm.
And I'm sure he'll tell Donald Trump that if he imposes 60% on all Chinese imports to the US, it is going to create mayhem all over the world.
Inflation.
And it could only lead to a worse economic scenario for all of us. So I hope he doesn't go down that route.
I think we all know his negotiation tactics by now, Axel. It's make a lot of noise and go to brinksmanship, and then maybe he'll still impose 15 to 20% tariffs. But yeah, I was just coming back to this. Sorry, this is a real where I see the advantage of marrying fundamental, because of course I'm the fundamental believer. And was a technical analysis. How would I say it? I was
skeptic.
No, willing to learn, especially after meeting Axel. But this is the exact scenario when things change, right? The fundamentals might still get me to want to buy gold, and they do, right? But if I know that technical analysis, and if I can, take Axel's wisdom, then it would have stopped me buying it at 26.50, 26.40, 26.30, 26.10, all the way down, because fundamentally I'm still in the same mindset. I want to own gold. But if you know what to watch for, then you can avoid trying to catch that falling knife all the way down. And yes, maybe, at 2,650 or something like that, I can start cherry picking where I want my fundamental position. But technical analysis helps me, saves me a lot of pain in the meantime.
And the best part too, which is something that I've had to hone recently, is marrying technical analysis with the expected move on the options platform.
Oh, that was brilliant from last week, yeah.
Yeah, and that just gives me a sense of where to put the, stop, where to put, where to enter. And also, if I know what the expected move, never mind the direction, but it gives you the expected cone, right? Then I know where to be more efficient with my levels.
Right. Axel, what else has jumped out to you?
By the way, before we switch to something else, I mean, the long-term gold chart is still pointing higher. We're seeing a correction against the long-term trend. So I'm not saying, gold's going to go to 2,000, anything like that. But yes, we've seen an 8% correction. But as you say, Richard, it's probably more interesting to get in now, longer term, than having done so $150 or $200 higher than where we're trading at now, because we went through that $2,605 low. Technically, we've broken that bullish momentum in the short term, and we may now consolidate for the next few months. Perhaps we'll have to see. So my target of 3,000 in the first quarter might have to be readjusted. And I'll have to do some analysis on it later today and see whether I can update my end of year forecast and also my forecast for next year. But I don't like forecasts. I know this might really sound strange as a technical analyst, but it's just trying to get the odds in your favor. What I do like with technical analysis, though, is that it simplifies everything, because you just look at the price, and price is nothing else than demand and supply, like in economics, and you have an equilibrium, which is the current price between buyers and sellers. So if you can analyze the price action, how fast something moves up or down or not, and what sort of, if you can discern certain patterns, you can increase the odds of you being right, and that's what you then trade. It's like the cheetah being the fastest animal in the world. It doesn't hunt other, any old prey. It sort of will go after fragile, injured, young prey or very, very old prey, where it increases the odds of making a kill. Same with trading. So it's not so much about forecasting. I mean, that's part of it, but it's hit and miss, to be honest, most of the time. It's more about trading the momentum that is behind a move in the direction of that trend. So talking of which, Last week, we talked about being short oil.
Yes.
And you can see it hit our downside target. I even did a trade of the week on Monday last week, going short oil. We've now come off, what, $4 or $5. That trade worked out really well, and we went short, as you showed here on the yellow horizontal line, Angeline. We went short at that resistance.
Yes, we did.
Previous resistance, previous highs act as a resistance psychologically. That's when the market turned lower last time. People remember that, and they sail into that again, and it happened again this time. Now, where are we? We are back at support. If you go to the left of your chart, you can see around the $68 area, we've got support. And that's where we're trading at now. So we'll have to see whether we can hold there or not. Sorry, I don't know whether you're looking at WTI or Brent here.
WTI. Yeah. And also, I'm glad I remembered that support level because I shorted oil last week when it confidently went through that. But right now I've come off and I'm waiting because watching to see what it does when it gets back to that 6,800 level, whether it punches through or not. So that for me is very useful, with the fundamentals, of course, in mind as well. A quick one, Axel, also, I know you've been watching some crosses as well.
Yes.
Any
A lot of people have been asking me about euro dollar recently, where can it go to, etc. And it's really interesting.
Here's a chart.
You need to also zoom out. People just look at intraday trading, in and out, a few minute charts or hourly charts. But look at the daily charts, look at the weekly charts. And if you go back to the weekly charts, you can see lows from 2 years ago, which have, over the last 2 years, several times acted as support. That line that you've just drawn on there, Angeline, the red line, if you zoom out now on this weekly chart, you will see that we're trading back. If you go to the right-hand side of that chart, exactly that whole support area where the horizontal yellow line is, and we're trading there now. So that's why today euro dollar seems to be holding in the short term. Obviously, it's also because the dollar, the US dollar, is no longer appreciating with as much momentum as it did over the last few weeks. But potentially we could see support creeping in here. But that's just potentially the case. We could still slip further. We have to see, and as you just said with regards to oil, you are waiting. It's good to sometimes wait, and you will see if we get a relative high, which is higher than a previous relative high on a daily chart, we might get a reversal to the upside. If we don't, the trend's your friend, and in case of euro dollar, same with cable, British pound against the US dollar, is still pointing down.
Well, that's interesting because Peg had just put on a long GBP USD, but we instantly got a question from Andrew McKelvey. What's the thinking behind that? What's the rationale? And it is a really tricky call at the moment on both sterling and the euro, because which is the lesser of the two evils? I don't know. That's it's so hard to tell.
Yeah.
I'm just drawing some lines.
As long as you have a stop, that's the most important thing. What I always say to people: as long as you have a stop, and that stop is somewhere where it makes sense to place it. And for that, technical analysis is really, really useful, because as Angeline said just before, previous highs and lows create resistance and support. And if you place your stops on the other side of that, you know that most likely if that support gives way, you're wrong. In that case, euro dollar could go further down. So if you want to go long cable or euro sterling, you need to have a stop in place somewhere. And most likely the stop might be the recent lows. If it goes through there, the trend's likely to continue, because as I always say, the trend's your friend.
Don't go against the trend. And Axel's heard me say many times too, I really like it when I come back to my screen and it's an absolute blank, because it means all my stops and limits have worked.
Well, I'd rather it was your take profit limits that had worked rather than my stops. But I know what you're relieved.
Because it's worked, right?
Axel, may I put you on the spot on something? Because it's a big week. And if we can throw up my screen, of course, Wednesday night, we see this bumper. This is the big story of the week. It's going to be what happens. I know my view from the fundamental point of view.
NVIDIA then?
It is. Sorry.
Yeah, sorry, I can't see your screen very well. So.
Got you. Yeah.
NVIDIA, yes. I mean, down 2%, I believe. No, it was up 2% last week when everything else went down, all the other Magnificent Sevens. So technically here, where's your last reaction low? That's what we need to look at. And that is this low, where Angeline's just pointing at now. So if we were to fall through there, perhaps we could top out here. We'll have to see whether we can see some negative divergence on the relative strength index. I can't see any on your chart because you haven't put one oscillator at the bottom of your chart. But if you put a stochastic or a relative strength index on
I've
there,
got RSI
if it
on.
makes a lower, or RSI, if it makes a lower high, and you've had a higher high with the NVIDIA share price, then perhaps, so we could see some negative divergence here. The problem is, if you've got earnings out, it might straight away open, much lower than that level. So it's very difficult to trade. And obviously, the closer you get to Wednesday, if you want to have a guaranteed stop loss with IG, for example, where you could, safeguard yourself, the closer you get, the higher the risk is for IG to take that risk on, and the wider the spread will be. So if you are trading now, it might make sense to do it. Put your stop on there now, because you might get a better spread if you want a guaranteed stop loss. But yeah, for me, I mean, the trend's still clearly bullish unless we see a major reversal to the downside and a major slip and close below those lows I've just mentioned and other lows further to the left on your chart.
I'm just imagining the trading desk round the corner now going, oh no, Axel's just remind us we've got to change the guaranteed stops for NVIDIA, quick.
Well, they have to look after our risk, don't they? And that's also in our clients' interest, because as long as IG is doing well, they can trade. If we are no longer there, they can't trade. So we have to protect ourselves, of course.
Very much so. Do we have any sneak preview of the trade of the week, or is that?
I honestly haven't had enough time to look at it yet, because I do take time looking at these, and I haven't come up with my favorite one yet.
I have an trade of the week.
Oh, play of the day.
Actual
trade of the week, your play of the day.
I've got an Ange play of the day, and it's already in play whilst you're with Pega.
Perfect.
So I'll bring that up later on. But
we'll have a look at that. What's next?
Axel, interesting to see as well that just checking on the oil sessions, because we got obviously a big week for NVIDIA, and it is down 1.6% as we speak. 31 minutes, people, into all sessions already.
You've seen the Tesla move.
Yeah, and that
Right,
Tesla move is also quite painful, up 8.3% for those of you who called this the wrong way. Micron Technology up as well. JD.com and NIO, two of the Chinese names that I watched you and Tom put on, because you've got contrarian view on the options front. That trade would have gone really well because they are higher.
Guys, if we just throw up my screen, please. We've got the winners and losers on each side. So yeah, what I haven't seen the news in Tesla. I don't know why that's up 8. Let's find that out for later. Then the losers, you can see, as Anne says, NVIDIA, Uber down as well, and then some of the banks losing a bit of ground. Eli Lilly's one I've got my eyes on. Walt Disney last week. What a week! That was the mover of the week. Robinhood, you saw an article in the Sunday Times. If you want to see one of the most arrogant interviews in history, then read that interview in the Sunday Times with the CEO of Robinhood. Instantly made me dislike him. And I can't imagine certain regulators would be overly impressed with the headline of "We are bringing crypto to the UK" in as, get everybody involved without any regard at all for any addictive nature or anything like that. It was quite the interview. Right, I think it's time to go on to market measures. Axel, thank you so much for everything. I've missed you, Axel. I've missed that wisdom, and very much looking forward to seeing you and chatting more this week.
Thanks so much, Axel.
See you soon.
See you
Thanks
soon.
both. Bye.
Right, so of course I am fresh from a week, spending 15 hours a day, I think, with the master, with the man who's seen it all, Tom Sosnoff himself. So at last, the market measures are really implanted in my mind, and I've got that strategy down to a T. So today, we're going to be looking at the pros and cons of selling small delta options. right? Now, we're used to trading, a lot of last week was trading 20, 25 delta. We didn't do that many 16s, which was interesting.
I thought that was interesting as well. I was waiting for you to, or Tom to call up 16, but he didn't.
Yeah, it was a lot of 25s. So today we're going to be comparing 25 deltas and 20 deltas. But what if you go smaller than that? What if you go 5 to 10 deltas, right? So what are the pros and cons of selling small delta options? Let's get into today's market measure. Right, as market volatility and the possibility of a market correction increase, right? Sahil making a little bit, getting the crystal ball out there. Traders seek to minimize their risk by improving their odds of success. One way to achieve this is by selling smaller deltas, right? Going further out, such as 10 or 15s instead of the 20 or 30s. So that reminder, 5 or 10% is 2 standard deviation away from the current price. So if we look at 2 standard deviation strangles, they've got a success rate of 95%, right? 95% success rate, making them attractive to traders if your main focus is to have those winners. But of course, there are pros and cons with every strategy, right? Smaller delta options have a higher success rate, but of course, they do have a negative, and that is a lower return on capital due to less credit collected. Now, which strategy performs better historically? So Sahil Baby Shark has run a test on the Spider 1 standard deviation strangles, right? That was the 16s, against 2 standard deviation strangles, 2.5 delta. So the really smallest ones you can go. And in the strategy, we're looking at 45 days to expiration, of course, and taking them off at 21 days. So all the research that's gone in by Tasty to work out the best strategy is putting it on at 45, taking it off at 21, and we're looking at 19 years of backtesting.
I like this. As you know, I like little and often, so this really suits the Ong style.
That's right. So yes, small trades, getting lots of small trades on there, taking the small profits. So on the success rate, look at those success rates though. That is incredible. Over 19 years of back testing, even an 82% success rate on 1 standard deviation is quite spectacular. On the 2 standard deviations, it's close to 100%.
Wow.
Now, the 2 standard deviation strangles, they've, as we said, extremely high success rate. However, they generate lower average P&L. Right, of course, the return on capital for each position is smaller. So it's only 0.04%, right? That's the daily return on capital. But a win rate of 98%, yes, please. Now, your initial premium there that you're selling, 241. So you can see there's a big difference there as well, right? Big difference there in the premiums that you're selling. Average P&L, 56 on the 1s, 14 on the 2s. Now, Ange, do you want to take us through this?
So what would be the long-term portfolio performance for both strategies if they were simulated in an account with the same size, with 25% of the asset value allocated to each strategy?
Ooh, so we're doing a head-to-head.
Yeah, we are. I'm very excited about this. Both strategies were managed with a 21 days to expiry.
Now, from a portfolio perspective, 2 standard deviation strangles underperform 1 standard deviation strangle by 27%. However, it really excels at that volatility control. And as you remember from what Sahil wanted to find for you, if people are worried about a market correction, if people are worried about the huge run-up in the S&P retracing here, then this strategy excels at volatility control. So you can see the annualized volatility is much, much lower on the 2 standard deviation. So there's a time for everything, right? There's a time for trading straddles. There's a time for trading strangles, and there's a time for trading 2 standard deviation strangles. And if you think the market is about to have some kind of correction, then this could be it, right? Because yes, you get a lower return on capital, but you also get that lower volatility. What's our takeaways, Ange?
So here are the key things that you should tuck away and put into your diary. Smaller delta options are great for their extremely high success rate and volatility control, which is more suitable for traders with low risk appetite. Smaller delta strategies such as 2 standard deviation strangles may underperform larger delta options in terms of P&L and ROC. I like this. This is something for everyone, right?
Wonderful.
Whether you've got lower risk appetite or higher risk appetite, you can choose a strategy that suits you.
And I think that was the real clear message of last week, right? We went through jade lizards. We went through the strangles.
Iron condor.
Please say that again. Go on.
The iron condor.
the iron condor. Sure, that's a dance, isn't it? Do you see how much my seat's going down, as I mentioned earlier? Look at this.
It's like we need that Hamlet cigar music. This is why I keep thinking of that. And Steve last week actually messaged in and said, Ange, it's from the Hamlet cigar, you know, the pass button. So I even showed it on air. But yes, every time I look over, happened to Chris Beecham.
Getting lower and lower. Oh, did it happen?
It did.
I'm going to change that during this break. We're going to break. We'll be back for a big roundup of what's coming up this week. More in video.
Corporate earnings reports are quarterly reports that reveal the financial results of a public company. They include valuable information such as revenue, net income, and earnings per share. Investors can use corporate earnings reports to gain insight into a public company's performance. They help investors decide whether it's time to buy, sell, or hold on to shares. So, how do corporate earnings reports impact trading? 1. They affect market indices because indices are made up of publicly traded stocks. Index values go up or down based on stock price movements tied to company earnings news. 2. Corporate earnings reports can signal a healthy or unhealthy economy. They could influence central bank decisions on interest rates and monetary policy. 3. Unexpectedly positive or negative reports have the potential to induce volatility in the stock's price and prompt activity in the market. 4. This surge of trading activity could result in more liquidity. It becomes easier to enter and exit trades when there are more active buyers and sellers. However, increased volume can also introduce greater unpredictability and price swings. 5. Positive reports can bring in foreign investment to a country's market. Negative reports could make foreign investors less interested and reduce their involvement. 6. An earnings report has the power to sway how investors feel about a company or the market in general. How an earnings report impacts the price of a stock depends greatly on what investors expected. If earnings exceed estimates, the price tends to go up. If earnings disappoint, the price often drops. Meeting expectations is key. Even good news might sink a stock if investors hoped for better news. Likewise, a stock could jump if bad news wasn't as bad as predicted. So, how do you trade corporate earnings news? The challenge is to work out how you might react to news that will thrill or disappoint investors. Have an action plan in place for earnings that exceed expectations, or earnings that might disappoint. there is also a chance that the earnings might be exactly what the market expected, and there won't be much price movement at all. Keep in mind that the market can be unpredictable, and these changes can happen in a flash. Options strategies can allow traders to trade big price swings in either direction. Strategies involve buying both call and put options on a stock prior to the report. Call options can protect short positions from rising prices, while put options can protect long positions from falling prices. Finally, it's essential to have risk management practices in place, such as an airtight trading strategy, stop-loss orders, and portfolio diversification. Consider bird's-eye view factors like industry trends, the health of the economy, volatility, revenue growth, and trader sentiment. With preparation, agility, and risk management, you're on your way to trading corporate earnings news effectively.
Hi, I'm Sean Mearson, Senior Market Analyst at IG, and join us for our new show, Charting Essentials. That's every fortnight on IG.com, our trading platform, as well as YouTube. And that's a show where we look at everything technical analysis, hoping to help you upskill. Whether you're starting out or just looking to level up, we got you covered. In each episode, we'll break down complex concepts into easy to understand lessons, provide practical tips to help you sharpen your chart reading abilities, explore powerful technical indicators and their real-world applications, as well as guide you through hands-on examples to reinforce your learning. So come, let's work on our skills. Let's get better at this. Let's accelerate that trading journey, learn to have confidence to trade, and make informed trading decisions.
Hey trader friends, welcome back. Loads are on our plates this week, not to mention NVIDIA, but tons before we even get there. Starting off proceedings, we've got Imperial Brands on Tuesday, full year numbers, also RBA meeting minutes if you trade the Aussie dollar. Wednesday, we have UK Consumer Price Index for October, US EIA crude oil inventories, British Land, Sage Group as well. And then Thursday, of course, you've got Crest Nicholson trading statement, JD Sports, and on Friday, that GfK Consumer Confidence, big retail week as well because we've got UK retail sales.
But a bit dead on the macro compared with what we've had in other weeks. It's a little bit dead. So you can see here, we've got Philly Fed, we've got jobless claims on Thursday. That's the only thing that really, kind of jumped out. Of course, we've got the G20 today. That's something to watch for headlines coming out in the G20. But yeah, even on Friday, we've got a bit of the S&P flashes for PMIs, but nothing hugely market moving.
No.
Touch wood, you never know.
Yeah, the big thing that we are looking out for is NVIDIA, and ahead of that, we also have numbers from a lot of the retailers stateside, so Walmart, Lowe's, and also taking a look at Palo Alto Networks and Target as well midweek. So tons to look out for. I do have a play of the day in place already.
Yes, now you teased us with this earlier.
Yeah, so Palantir, if you look at my chart, whack it up. Whilst Rich was with Pega, I put on a trade on Palantir, just a small one at the moment, because you're probably asking me, oh, Ange, you're not a bit late to the game because there is this Palantir joining or being added to the NASDAQ. But I have been trading it up as it heads higher. So giving you a weekly chart just to show you where we are at the moment. Can you see we are at highs there? And actually, if I'm looking at the minute chart now because there is a reason for my madness and it is clearly marked out by my technicals. If we punch through the 66.21 with conviction, then I will be adding it with a take profit at 6417 level. The reason for this is some other new things have happened. Do you trade Palantir?
Never have I traded it.
So
Never.
Palantir has several things that have happened in the last couple of hours. Not only is it, the old news is going to transfer its listing to the NASDAQ from the NYSE people, but at the same time, and the ticker will be PLTR, at the same time, it expects to be eligible for, obviously, it's going to be added to lots of funds, right? But at the same time,
when was this announced?
I think it was a couple of weeks ago.
Okay.
But last week, the company raised its full-year revenue forecast for the third time. It's starting to say more good things about, you know, the AI boom as well, that it continues to benefit. Plus, we have NVIDIA coming up as well. And I think that perhaps it's going to potentially, we see it punch above that level, more upside there for Palantir ahead of that addition, that transfer of listing to the NASDAQ.
Just one, from trading with these guys for 15 years, be very careful when you get additions to indices, okay? This goes for everybody, that as soon as it's, well, before it's announced, right, then there's risk arb trading desks all across the world that predict these things very, very carefully, right? It's a huge area of funds that track what might go into indices, what might not, what might come out. And they put positions on, right? So it's index arb. Now, when the announcement goes, then they obviously go bigger in their position. As soon as it's confirmed, they go bigger. So that's already happened, right? They're already long Palantir. So they've got their long position, knowing that it's going to go into the index, I guess it'll be this way around, going to go into the index in 2 weeks' time or a week's time.
26th.
Right? Now, they build that position, and then on the actual day, you don't often see the move that you'd expect, because that's when they sell. So yes, there's the buying pressure from the index trackers, but index arbs have already got that position on and they sell into it. So the demand and the supply generally match off, and you don't see a big move in that auction at all. The move's already happened, right? Because the risk arb, index arb guys have been buying it and buying it and buying it and buying it. So if you pop that chart back up, Ange, so be very wary of now, the daily, sorry, be very wary of buying into something if it was announced 2 weeks ago, because that move is index arb funds.
Which is why I am not going to be sitting on this up right until the 26th, because I think that's already baked in.
Yep.
But I do think that I will potentially sit on this until NVIDIA, right?
Yeah, with a good stop loss. Yeah.
Exactly, with a very, very strict stop loss and strict take profit.
But yeah, not generally for this one, but just for anybody trading, any professionals trading index, you got to be really early on these things. What can be interesting is to look at the days afterwards. How does it trade in the days afterwards? Because also these guys run the other side. So they'll buy it, and then they'll sell and they'll go short on the event. So they're expecting some return to the mean as well.
All sessions, we are still, if you guys, trader friends, know why Tesla's up so much, please let us know. We're still looking out there. I don't know whether it's got anything to do with the fact that there are some lobby groups now telling or asking Trump not to take away that $7,500 US dollar incentive for EVs. And I guess now if Musk is also his best buddy, it might not happen if Tesla wants to continue being king of EVs in the US anyway. Tesla up 7.6%. Supermicro Computer is also up more than 10%. We saw, of course, all those Bitcoin-related assets rise in the last week whilst you were with Tom. Moderna up 2.8%, and also Ben, Upstart, up 1.7%.
What level is it at? I haven't looked at that for a week. What level is it?
Upstart.
Oh, it came off. Oh, please, Ben.
6966.
Ben Boswell, please. I haven't heard from in a while. Please check in. Tell me you're okay. You haven't been trading this thing even more.
Let's take a look at the losers. Nvidia now down 2.8%.
We just had a very funny email in. So for anybody who wonders if we look at the email ask@ig.com.
We do.
Right. We've just had, and I don't know who this is targeted at. Love the content you share. Very inspiring. This is from Beatrice, and she'd love to collaborate on us with her natural skincare on our platform. I don't know if that's a compliment or so.
If it was after last week when I didn't have Rich here, I really need your help. Yes, I do.
Your skin's fantastic, so I know it must be. Beatrice, if you've got any anti-aging, then we can definitely chat.
Under eye for last week. I mean, I think PJ Ochilba messaged him on Friday, and you look exhausted. I was like, I am exhausted. Rich, come back quickly. Because, there was one point where Caleb ran out and got me some water because I drank everything that I brought into studio, right?
Yeah.
Everything.
It's like a sauna in here, so you have to stay hydrated.
Speaking of which, Rich is very good with numbers, right? But I'm very good with words.
I got a compliment from Sosnoff. He looked at the expected move on the Tasty platform is incredible. I will actually get an example up.
Yeah, show us the expected move.
He said, oh no, sorry, you can take that off again. So it's the expected move on Tasty. So we have a look at maybe Tesla, for example, right? So let's get it up. So Tesla, here we go. So looking at the options now for the end of, well, let's do 11 days away, right?
Yeah.
Up here, this 36 here is just such a wonderful tool because that's the expected move that the options market is pricing in for 11 days away.
From today.
So Sosnoff shouted out, he was like, okay, so the share price is 320. So just put this, and he started to work out what the 36 was, and I shouted out straight away, 286. And he turned to me, he's like, wow, they really teach mental arithmetic in Scotland, don't they?
In Scotland.
So that was it. That was the one compliment I got all week.
Oh, I thought it was very complimentary.
I'm joking.
Speaking of which, you're very good with numbers. I'm very good at remembering words. Am I right in saying? I think I am, but 2 kids kills that, people. Just telling you right now. But you had a birthday, didn't you? Did you not have a birthday recently?
Whose birthday?
Your birthday.
Completely wrong.
I know the 111 stands for either January or November. I can't remember which one.
January 11th, not 11th of November.
Okay, Jan, just checking,
Good,
just checking.
good,
I remember the
good memory of the
111
numbers.
somewhere.
So that was, and then the other thing that I really liked was the IV rank, right? This IV rank is also your real cheat to the options market, because remember, we like to sell vol, we like to sell options. The guys from Tasty, that's their experience and wisdom. Selling options is the way forward. In a lot of scenarios, they can buy them as well. But that IV rank tells you that it's, let's say it's a measure between 1 and 100 of its historical volatility. So if it's at 55, it's slightly more than its historical volatility. But there is one stock that is remarkable. Look at this stock's IV rank.
Wow.
It's never been as volatile, right? Never been. So even you can get a number above 100 that just shows you how insane the IV rank is. So something like Trump Media would have been the same before the election. But that is a real extreme. Anything above, say 60 would be suggesting that it's a real high vol opportunity. I wonder what that expected move is on an SMCI.
Yeah, have a look for November 26th. Can you punch it up? November 22nd, November 29th is the close.
$7. The stock is trading at 18, and its expected move in the next 11 days is $7.
Wow. Just out of curiosity, is
38%.
there an optimum number that the Tasty guys look for? I know Tom was saying that anything above 30 is considered volatile.
Running our market measures.
Oh.
Tune in later in the to find out the optimal number.
I like getting straight to the cut to chase.
That's it.
Where is the salad dressing? Where is the salad dressing?
Looks like we're going to finish on time today. We're already getting our names thrown up, which means get off.
I know,
The
they're
music's
putting
starting.
the music. Yeah.
I'm off to work on my skincare. It's been fantastic seeing you all during last week, and then seeing you come up in the comments. That has been absolutely brilliant.
Thank you so much. Monkey Man also saying that it's because Trump is now looking at self-drive for Tesla in terms of that move.
That's what it is,
he
right? Yeah,
thought
that
is
story
the move.
in, I think it was the FT this morning.
Yeah.
Okay, very interesting.
Well, we'll see you same place, same time. Any
Yeah,
questions?
should we come back tomorrow?
Punch it to ask@ig.com or in the comments page. All right. Have a good one.
Have a great day. Thank you all.
All right, everybody, welcome back. It's another Rising Star shoot. I think you guys are going to like this one. Something a little different. We are going to explore two things that we don't usually do on Rising Star shoots. Number one is we're going to talk to somebody that's gone from being a retail trader to kind of somebody that's stepped it up to being a full-time gig. That's one thing. And the second thing is somebody that's also taken a lot of the Tasty Trade mechanics and adapted them to a zero DTE type of trading style. And somebody that trades 100 to 200 times a day, somebody that trades very aggressively, kind of a style I like a lot. And so I'm excited to have this conversation and learn more about you.
Me as well.
Get your helmet on, as we say, because here we go. So you're 30.
Yeah.
When did you make your first trade?
I made my first trade in 2017, 2018. It was basically, I'd read some Warren Buffett stuff. My dad had been trading options for a long period of time. He introduced me to the concept of a covered call. So I started playing them on Facebook a little bit and was interested in the financial markets kind of through my dad and learning about that as well.
So 2017, 2018, kind of a pretty strong market, low volatility, strong market. Definitely at that point, probably anything that you bought went up.
Correct.
And you sold some calls against it. So you're like, this is easy peasy. So let's talk progression. So you're kind of just starting out. What were you doing how were you supporting yourself?
I was working in construction as a superintendent. I was predominantly doing kind of like Senso manufacturing and drug manufacturing plants in the Bay Area alongside hospital construction.
Okay. So construction, that was your undergraduate degree too.
Correct.
Got it. So, so you're kind of doing what you had prepared to do. And did you get bit by the bug?
Yeah.
Or was it slow or just get bit?
I realized very quickly that what I had signed up for in college and what I thought was safe was actually risky in turn by doing the same thing that everyone else was doing, and kind of I was affected by the upward drift in financial markets, whether I liked it or not. So I had a lot of time commuting from work and started to just pick up on podcasts and such like that, which is where I rolled into you guys.
You know, it's funny. Sometimes people, they roll into us because it's like, it's something that you feel like you have a little bit of control over. And a lot of times there's some disenchantment out of school where you think, oh man, I just lost control of everything.
Yeah.
Like, I don't control my own destiny anymore. And so they end up with us because you're thinking, well, this gives me some control back.
No, definitely. And the way you kind of speak to it is, here are ways to extract to Azure why we think it's present. And here's data that basically backs that. And that really resonated with me, where it's like, here's a construction drawing I'm looking after. Here's what makes it structurally sound.
Yeah.
And when we follow this, we usually get our output.
Are you kind of like a little bit of a math geek or an engineering geek a little bit?
Yeah, I think everything really comes down to the details of it. And I'm a big advocate of the simpler it is, but the more depth you understand all the concepts around it. Yes. That's what true mastery is, and kind of the way you guys explain those concepts, I think, is a good emulation of that.
So quantitative finance just made sense to you. Like it wasn't something that seemed very foreign. It seemed like, oh, I can figure this out.
Yeah, it made sense basically from day one. And then what really made it click was when I realized the quality of your assumptions around that is really what it gets into. And when I started tracking everything and inputs and outputs, I kind of related it to test, trade, track, and be curious.
Yeah.
And that is really kind of the formula to seeing what fits you and then optimizing your strategy for conviction instead of return. Yeah. So you can follow through with that and get what you bought.
So 2018, 17, 18, 19, whatever, when you're first starting out, you're obviously working, you goes into the pandemic, and you're still, I'm assuming, trading a little bit on the side, investing a little bit on the side, working your butt off in the construction, engineering side of the construction job. And then what happens?
Yeah. So at that point, I think it was like most people, where you're trying to put in 10, 15 hours a week in trading, and then you're working 60 hours a week.
Yeah.
And you're asking mild success. You get in a meeting, trying to have a life too, everything. Yeah. It's easy. Buzzer goes off when you're in a meeting. You're like, that's not okay. And then I'd made it through COVID relatively okay, because I'd taken some positions off.
Sure.
But then I had gotten laid off I was in construction, I was building skyscrapers. At that time, it was no longer needed. And I basically decided that day that I was like, I can do this, I believe it. The difference is like I have complete control over kind of what my destiny is of this.
Yeah, sure.
And I started to, again, find another job, but really go all in now and kind of put my job almost as a second priority and trading as the first priority. Not advice I'd necessarily lend to everyone, but that's when it really clicked for me.
It's the kind of thing where if you're not going to roll the dice at that point, when would you? There's no risk to you at that point to just say, hey, let me give this a try, because the downside is, all right, I start over anyway.
Yeah.
And the upside is maybe I figured this out. Maybe my timing is perfect. And maybe I'm just entering the space at a time when, they need 25 and 26-year-olds that are strategic, that can understand a different road through finance.
Yeah, and I like that you bring that up too, because one thing that I kind of related to it when I got into it, there's obviously compound interest, which is just making money, but there's also the concept of compound knowledge. Whereas if you start something at, of course, 24, 25, and it really gets rolling, it's a hockey stick return on your ability to learn at that.
It is very hard to impress upon people how important longevity is. Just, you had to play the game. Buffett's probably the greatest example, because it may have taken him, 50 years to get to the point where he could create some kind of exponential return. But it's all about longevity. And I think at 25 or 26, it's very hard to envision, it's very hard to consider longevity, because you want instant gratification.
Exactly.
So now you're, mid-20s and post-COVID, I'm going to fast forward some of the story for you. You've made some money. You have a couple $100,000.
Correct.
Through real estate, through whatever else you've saved up your whole life. That's everything you got, right? You roll the dice with everything you got.
Exactly.
Okay. When you decide to go full time as a trader, late 22 or something?
Yeah.
Okay. And you're like, I'm all in. I'm going to take this to zero. I'm going to be zero or whatever, right?
Yeah.
Okay. Because I love that. So okay, now what do you do? Like how do you start figuring it out? How'd you, obviously you had some idea, but how'd you make it work? How'd you figure it out?
First thing is just like proximity is power, and modeling from other people that were doing it. So I consumed as much information as possible, watched your guys' show, and was originally exposed to kind of look back at that point, which is the first back testing thing I'd seen. And as I got into this, I was like, this result does equal that. I can make money when this happens. And I saw that even when I took drawdowns, it matched the back test. So I really started getting into the quantitative part and the numbers part, which is like you're talking about, how do I enable that compounding with limiting the drawdown? What I like to say is I'm locally concave for income and globally convex to basically limit drawdowns, which I like the liability to have.
So what was your worst drawdown? Like you basically have 2 full years under your belt, 2 full years, of which your returns are extraordinary. We'll talk about it a little bit, but did you have any really bad drawdowns in those periods?
I was running like a 90-day gold TLT S&P structure during the Russian invasion of Ukraine. And that had kind of taken me about a 20% drawdown, but apart from that with zeros, my largest drawdown has been about 8% from that time forward, and it's been
that's pretty good
every quarter. Yeah.
Yeah, 8% is really nothing given some of the returns, and then 20% during that one event just when you're starting out is also like pretty small on a relative basis. So you really haven't had to feel that the crazy pressure of. Yeah.
What I like to say is, we should look at ourselves as risk managers first, and then kind of capital allocators second.
What has happened to you since like you talked about the Russian invasion of Ukraine, and then, obviously trading a bunch of different products at the time. It sounds like you've more transitioned into essentially just trading in the S&Ps.
Correct. The S&P is very accurately priced fall. The friction cost to get in and out is extremely low, which I think aids.
So to find friction cost,
this would be priced across the bid-ask to get in and out of positions. And then also with the SPX being cash settled with no risk of assignment, and then also the liquidity of it in general with the width of that bid-ask spread, and then the fee structure and commissions on such a large instrument are relatively low, that I think it's the best avenue if you're playing a pure short ball perspective to take.
What do you think is the bid-ask how would you define or quantify the bid-ask differential of the SPX?
I would quantify it as the price to cross it to meet from a buyer to meet a seller.
Right. So what do you think that is?
From my data, it's about 2% on the entry and about 5% on the exit if you're using a stop. It would also be about 2%.
2% of the premium, or 2% of not the price of the index?
No,
the premium.
Yeah.
Okay.
Option here.
Got it. So if you're doing, let's just say, what delta do you usually hang around with?
I'm usually in between about the 7 and 20 delta. So
okay,
playing kurtosis basically.
Right. So you're probably in the neighborhood of, how far out? Oh, you're always doing the zeros.
Yeah.
Okay, we'll get into that in a second. So the zeros at that delta, you're probably, where are you? Somewhere in like the $6 range, is it?
It depends on the volatility, and it depends how long you go to buy your wings. I do go up to about $4.50, but
okay,
I do a lot around $1 to $3 seems to be a good sweet spot as well.
On each side or total?
Each side, I do lean a little more on the put side for credit selling, and then I'll hold longer dated calls. So I kind of look at the call side as a sharp buffer, kind of for a combo.
So you skew it a little bit.
Yeah, I mean, we're always kind of skewed in the SPX because of wing price. So if you collect like your dollar on one side and a dollar on the other,
yeah. Oh, you're going to be
wide.
Yeah.
Your volatility risk premium is actually kind of weighted a little bit.
Yep. And you're talking about 2% on that number.
Yeah, to get in to cross the pass for the premium.
That's just for so people, it's a half a tick basically. It's half a tick, 2 cents, 2.5, something like that. And then on the getting out, you think it's like double that.
Correct. And that's an aggregate. It could definitely, in times of higher volatility, be 10% potentially, but over enough occurrences, yes.
And that's closing.
Correct.
Yeah. Are you ever letting things expire, or are you mostly always closing?
I'm almost always letting them expire because I kind of view that as a way to get 2% alpha from not closing it. Obviously, if I'm threatened and I need to manage my risk, that comes foremost. So if that delta is kind of getting close to the money, that position's definitely coming off at a predetermined risk ratio as I put the trade on.
Right, because the offset of the other side of saving the 2% or the 3% or 5%, whatever it is, on letting it expire, the other side of that is this massive potential delta risk with 2 minutes to go.
Correct, which I would like to avoid as much as possible. The way I think of managing my risk is I want to limit the degradation of adjusting those options to capture the premium. Yeah. But I also want to use risk management to basically shape the form of the distribution that I like.
And you only use SPX, right? You're not using SPY.
On the SPX.
Okay, because with SPY, you'd have, post-assignment risk, you'd have post-market movement, stuff like that. The SPX settles to cash. So at 301 or whatever the last tick is, you're basically done.
Correct.
Are you ever using anything other than SPX options to hedge 0-day SPX options? Like, are you using ES or the minis, the micros, the ES options, the SPY, anything else?
Just SPX.
Okay, so you are the ultimate one-trick pony.
Correct. And also, when we talk about hedging too, is I think a lot of people do hedging kind of after the fact, like once they get threatened on a position or whatever. But I always, if I'm selling a credit spread, I'm basically buying a hedge for it exactly at the same time. So I'm buying and selling the same vol. So it's basically evened out to offset my exposure systematically.
Yeah, but let's understand, when you say credit spread, you're really not trading a credit spread. I think you're really just trading, you have what you call a spread because you're buying some cheap way out of the money option. Yeah. But the reality is that it's just a
synthetically naked option.
It's a synthetically naked option. Yeah, you're just doing that for capital reasons and you're doing that for risk reasons. But, I mean, you don't really, that money is just a give up money.
Correct.
Okay.
Yes.
So are you going to like the cheapest option you can find?
Yeah, within reason. 99% of days, if you're going 200 wide or something, you're basically getting a nickel wing, but nickel wing.
But and the only reason you get a nickel wing is because it's a 0-day, but are you going longer duration?
So I am holding longer duration options that I basically start legging in about a week out, and then I take those up to 1 day out, and then those will be all long options. And by doing that, I can kind of capitalize on maybe large overhead moves, or if we get an extreme market direction, even though those long options kind of even out to zero in the long term, it benefits your portfolio and it can offset some risk at zeros.
So you just hold those and then just work everything else against them.
Yeah, I'm just holding those to expiration.
Yeah.
They offer you some offsetting of margining, and then they also offer you, I would just say, a diversity of risk as well. So yeah, we're looking at our sources of profit. We have credit spreads. Obviously, credit spreads can be uncorrelated, but when you need the uncorrelation, the only thing that is actually going to be uncorrelated is going to be long ball.
Now, are you almost always vertical? On these credit spreads, is it always vertical, or are you ever horizontal? Do you ever go out, like, are you doing, 1 DT, 2 DT, 3 DT?
I will do some calendarized structures. I think those do offer a lot of edge, and kind of having more of a bega will help as well. So I do offset with calendarized structures.
So tomorrow morning, first thing happens, market opens.
Yeah.
Are you already in a position from the day before that you set up, or are you putting the position on in the first half hour, 15 minutes?
Both. So tomorrow morning, I will have 7 days, 6 days, buys, 4, 3, 2, 1s all long. And then I'll also have a 1 day that I put on at the afternoon before that'll come to zero. And then right at 9:32, once the opening price discovery occurs, I will basically start trading credit spreads every 2 minutes until market close.
Every 2 minutes until?
Like 350, basically.
So you're just going to continue to lay them out?
Correct. Basically, like, as the market moves, it will.
You're not doing both sides. You're just doing one side at a time.
I'm managing each side individually, but I'm putting on trades as condos.
So at the end of the day, how many positions is that?
It comes out to between 150, 200, depending on the trend, which I'll basically go with if it's extreme in some certain direction.
And because you can afford to do that because they are all technically spread off.
Correct. I'm averaging in the volatility over the course of the day. So volatility could be extremely.
I get it. What happens on a day, obviously on a regular day where there's, some contraction, whatever, or we're either in a lull state or a contracting state, you're fine. What happens on a day when, market stays unchanged, VIX goes up big, market stays unchanged, market goes down, VIX goes up big? What happens?
It's pretty random. I would say that very large moves toward the end of the day when I have more exposure at the same small channel I'm exposed to. But if we rip off at like 10 a.m. from some data announcement, twice the standard deviation of a move, and that we roll into something, you could be completely fine.
What % of your trades come off at the end of the day?
Shortfall, 100%. So any credit spread is in cash, and then I'm always long the tails, long gamma, long vega, and long delta every day at 4 p.m. and 99% of my account in cash.
That's really interesting. So you take the crap home with you, and then you just start laying it out the next day, so you don't have to deal with buying the wings again.
Correct.
Very interesting. Yeah. So I should give a little more context here. So you started out when you first decided to commit to this business, essentially full-time trading, you had a couple $100,000.
Correct.
And over the course of 2 years, you're now up to 1.5 million.
Correct.
Okay. So we have to show that this is what, you haven't really, have you added capital, or is it mostly all profits?
It's predominantly all profits. I put in a little bit from a real estate investment, but it really started compounding with a larger account value that got me to 1.5.
Are you surprised by your success, or are you, because it's totally okay if you said, no, this is what I expected,
I think that the way I was trading, and if you are able to be good at it in the 0-day tenor, the benefits of compounding and lack of correlation, and basically like the length of kind of a bear market in zero.
When you say lack of correlation, what are you referring to?
I mean, if the market is tanking, those are some of the best days to sell zeros because there's so much demand for volatility.
So you mean lack of correlation though to like to some other event because you're not holding something overnight.
Correct.
Okay.
Which is predominantly what spikes up the volatility.
Sure.
And the consistency of it with it being repriced every day generally lends to a smoother P&L curve over a course period of time.
Of course. With the other side to that is though that there is statistically less edge.
Significantly less.
Significantly less edge.
Like,
yeah,
it's insane how much less edge there is. Like
you're trying to master, essentially you're attempting to master a zero-sum game. And because somebody has to win.
And mathematically there is edge in a zero-sum.
I totally understand. Yeah, I get it. But it's very difficult.
Correct.
Okay. I just want to be clear that this is like, so people listening are like, oh my God, why don't I just do that? Because it's not that easy. And plenty of people have tried and failed. And this is, there's a lot of bodies out there.
Yeah.
This is something where it's probably a very small percentage of people that have got to the point where they can, put as much on the line every single day as you do. You're using a significant percentage of your account.
Yes.
Every single day.
Correct.
Okay. Yeah, let's be clear. This is not for the faint of heart. This is now you're young. This is what you should be doing. I mean, it's kind of how I feel like I started this business the same way. Every single day was everything I had for like 15 years. So it's totally not unreasonable or crazy. It is from the sense of being like a part-time self-directed investor.
Yeah.
But it's not any different than if you owned your own business.
Correct.
Right. Same thing. You're leveraging your own assets, which in this case are cash, and you're managing it all strategically. Have you ever like varied and done something like you're just like, I'm never gonna do, like I can't believe I just did that.
Not really. I can get a little feedback from maybe I was sized too large, but after I really started to catch my stride with profit, I sized back down to being like, I don't want a drawdown that I ever have to pay a volatility tax to get out of. So psychologically that changed a lot. And then my stressor with executing it each and every day just basically completely changed that. Like even all of my trading, my screens are all in grayscale. So I get no emotional response from red or green on the screen. It's just purely, I want to get what the back test is and I want to create my occurrences. And I know that in turn, trading is an art, but math is an exact science now. So it's do a bunch of pass out.
Does your dad think you're crazy?
I think everyone thinks kind of I'm crazy. The example I like to give is in 2022, I had gotten laid off and I was literally driving Uber. And people were like, oh, how'd you get driving Uber? I'd be like, well, I just got laid off and I'm actually, going to trade full time. Have you ever heard of 0DT options? And I talked to people in Silicon Valley in the car to do that. And, it's kind of that belief in yourself of breaking patterns of what you previously were doing and what you think you're capable of. And when you're the person that believes the most in yourself, it's, the universe kind of blends towards you of meeting people and learning new things, and you get small insights from everything. And that feedback loop just continues as long as you stick to it.
How scalable do you think what you're doing actually is? Because there has to be, the world of finance is massive, but talking $100 trillion, whatever. So, but in your little world, is it scalable?
From the research I've done, if you're doing credit spread trades in 0DT, basically depending on a stop, you could be probably about 5% of the open interest and still kind of get in at a bid ask of what most people are doing.
It's almost impossible to be 5% of the open interest, just to be fair.
Yeah. So it's very scalable. And then I also run a lot of structures that I may use a stop loss on, but because I have those longer dated options, if we were to gap or something crazy were to happen, it'd actually be quite okay. And like an example, like,
well, if you're taking the long side home with you overnight, who cares if you have that's all bonus for you.
Even another concept is if you're trading 1DT shorts with 0DT wings, just during the day, you're still taking them off at the close.
Yeah.
What goes to one faster? If you get a massive move on gap, the 0, because if it goes in the money, that 1DT still has a little bit of time.
Yeah.
And so such with that as well.
Yeah. Yeah. Well, you can't do it the other way because as their customer,
it's not gonna work.
No, you have to own the longer duration. So yeah, so it doesn't matter. Yeah, otherwise you're talking about, an index that's just too expensive to have the naked side to it. But you can understand why the chunky options in the S&P 500 never go down.
Yeah.
Because
Worth it.
yeah, exactly. People don't really understand it. Like, why is this put, that's $1,000 out of the money trading for whatever it is, and you're like, because there's plenty of people out there that need to buy that for all the other stuff that they sell.
Exactly.
Do you think that you can scale it beyond the S, or is it just really an SPX S&P 500 product structure?
Yeah. I think it goes into every product that is cash settled. So you could do it in gold, you could do it in crude, you could do it in ZN, you could do it in
Well, those are not. I mean, they're not really cash settled.
Yeah.
The problem in the commodity world is that nothing is cash settled unless it's the quarterly expiration. Like their expirations all settle into futures. That is the advantage that's been able to give all that business into the SPX, is the fact that really is the only cash. I mean, there's other, there's other big indexes like that, but I don't think they have the liquidity that you need.
Exactly. And just the way the structure is with skew and SPX and how big it is, I just don't really think you'd want to go away from it.
No,
Yeah.
No, it's crazy. And, 20 years ago, you couldn't do this.
Correct.
It didn't exist.
Yeah.
Yeah. Do you ever lift a leg? Meaning, do you ever, when you have multiple verticals out and you are, the reason I'm assuming that you have the put and the call side on is because there's no additional capital required to have the other side on, so you want the additional credits. But are you ever lifting individual legs at all, or is it almost always what goes on as a spread comes off as a spread? Which is very tasty-ish, but
yeah. So I'll enter a trade as a condor, but I'm only managing the short leg if I get threatened on one side.
So you're just rolling up and down the short leg itself, keeping the long leg in place.
Correct.
Yeah, you don't care how wide the spreads are.
Nope.
Oh, that's a very fun conversation, because you know what? We don't have a lot of people that talk about trading the way you do, and that can articulate, like the zero space. I mean, listen, in a year, if you're making 100 to 200 trades a day and you have 250 days, and I'm assuming you work every day.
I take Fed days off, but that's it.
You take what?
FOMC days off, but that's
You
it.
take Fed days off?
Yeah.
Why?
It's just everything's held to that announcement, and there's so much price discovery. I would kind of lend it to trying to trade between 9:30 and 9:31. It just hasn't really settled on what occurs. Got it. And slippage tends to be a little higher on those. I've looked at it in general, and there's a negative expected return on it. So I would say selling credit on Fed days is.
So I guess the point what I was going to get to is that, so you make between 25 and 50,000 trades a year.
Yeah.
Yeah. And that's like, let's say it's in between. Let's say it's 30, 35,000. You know that for most people, that is like 10 lifetimes over. So one of the reasons that you've gotten, that you've been able to achieve what you've been able to achieve in such a short period of time, is that you've essentially shortened 25, 35, 50 years of trading into 2 years, 18 to 24 months.
There's a lot of feedback in that time period.
Yes.
When a trade's going on that frequently,
yes,
you start to recognize the patterns.
Exactly. And it's really that whole, just how fast the learning curve accelerates the more that you do something, and how fast your decision making now is probably like ridiculous, I'm guessing, in everything.
Yeah. And the thing with that too is I come back to the conviction of it, which is your decision making, and you're confident based on your learnings.
Well, now you own every single decision.
Yeah.
There's nobody else involved. These are your decisions. It doesn't. Sometimes the market wins, but it's still your decision. What a fascinating discussion, Mark. I love this. This was gave us a chance to talk about something different, and that was really fun. I think Tasty Nation is going to be is really going to enjoy this. Thanks so much for coming to Chicago, and thanks so much for telling your story. It's awesome.
Love it.
Keep it going.
All right. Thanks, Tom.
and got back to Chicago last night, and I just feel good to be home. It was awesome.
You're jacked. I can
Yeah.
tell. You feel it. You got a smile ear to ear. Can I ask you,
Yeah.
where'd you go? What were the cities again?
We started off our tour in Edinburgh, which is in Scotland, and then we went to Manchester in the UK, Birmingham in the UK, London, which was our biggest show, and then we finished the tour in Ireland, in Dublin, on Friday night.
What a rock star calendar.
And we
Can I
went
ask
up. We went up in Dublin. We went up against the. We went up against a national rugby game with Ireland against Argentina in like the World Championships, and we drew well.
I was gonna say, did you have like three people in the audience watching?
No. Every night, the only night we weren't sold out was the first night in Edinburgh because
That's awesome.
we just don't have as many customers. So we had a great crowd in Edinburgh, but we weren't totally full. Every other night in London we had to turn people away, and in Scotland in Ireland we were we were good. It's beautiful.
Going on the world tour. Can I ask, what did the Scots think of the first in-person look of Tom Sosnoff?
Oh, the Scots. Well, the Scots that were there wasn't their first look because they were all tasty traders. So it wasn't. The Scots was not. Anybody in Scotland that came to our event was a tasty trader.
I would pay to just send you out to a remote location in the world that has never seen you before or trading, and then and film a documentary on that, and then put David Attenborough behind it to navigate to narrate it. I think that's a hit.
This was the first live trading event I have done in over 10 years, actually in 12 years, and because we would do our show at 6 o'clock at night, which is noon in Chicago, so I haven't done these live events, where you just trade nonstop from beginning to end, in like 12 years. And I used to do them in like 2000, from like 2006 to like 2010, 11, whatever it was. And I loved it. But we don't do weekday shows anymore. And so doing these again, it was so awesome. And every day we put on I would say pretty close between 17 and 20 positions. And every day we made between 30 and 37 trades in that range. And it was nonstop. And people were like, hold on, we just kept going. We literally didn't stop. It was a straight 90 minutes. It was awesome. And we had the week called pretty good because we were getting all week. We were leaning short. So we had some fun. I mean, we weren't right on every market, but we were definitely right on, on the S&Ps last week. So
I swear,
it looked good.
Every time you're away, it's good for a 3 to 5% market correction. Every single, it's like clockwork, maybe 85% of the time. So let's start there. We're getting ready to open here in less than 60 seconds or so, and some terrifying headlines over the weekend, which I won't bring up just yet. But I'm curious, what was your read on that the last couple of days of expiration, that nice little sell-off on Friday?
Well, first of all, it doesn't surprise me at all because I thought, I was surprised we rallied on the election, on Trump's election win, because I thought no matter who won, we were going to sell off a little bit. A lot of people don't remember, but in 2020, when Biden won, the market was insane. It went up, I think, like 6% right after he won. It was an insane move. In 2016, when Trump won, the market had an incredible move. Obviously that night, and then started to go up. So it wasn't a Trump thing, it wasn't a Biden thing, that kind of thing. Because in both cases, the market had like a 5 or 6% move. I think the Biden bump was the biggest ever, after an election. But the crazy thing was this time, because we were starting at record highs. Remember, when Biden won in 20, we were, it was post-pandemic, it was nasty, all this other stuff. When Trump won in 16, the market was a lot lower, it wasn't record highs, all that kind of stuff. What we saw, when this election, 2024, I just didn't see how the market, especially with bonds trading down at the 116 level, I didn't see how the market was going to rally at all. So the rally confused me. And so I think that the sell-off last week was not a surprise. I think it was just long overdue.
Interesting.
And I don't think, I just didn't think the market was going to rally. I thought if Harris won the election, the market was going to sell off. I thought if Trump won the election, the market was going to sell off. And I didn't think we were going to rally under either person. And the difference is that if Harris had won, I think the bonds would have been a lot stronger, and then market would have had a harder time selling off. I think at 116 here, and I've been saying this for a couple of, for the 2 weeks since the election. At 116 here, man, you got to have everything line up perfectly for this market to rally. You got to, you need more than just, you need something. Now you got me sick.
Bless you. Bless you. I agree, Tom. So let me, the thing I don't, we were at like 20 something VIX though, man. And so to me, it made sense.
Listen, that's normal, right? After you had so much
post event.
Yeah.
That's what I'm saying. That the vol crush post event, the fact that it wasn't drawn out, it was definitive first night. I think a lot of people's worst fears are not going to be recognized under that scenario. To me, the vol crush makes sense, but getting down to 13, we had a 13 handle in the VIX last week. To me, I'm like, that's crazy. I mean, we've still got, to me, it just doesn't seem like just because we're on the other side of that election that vol should be that cheap. For us to normalize back to 16, to me, that makes a little bit of sense. I also agree with you that bonds yields doing what they've done. Again, I don't know. To me, you tell me if I'm wrong, but I don't know if it's like so much Harris or so much Trump. It's the fact that Trump, you get the trifecta, right? You get House, you get Senate, you get the executive branch. So now you have a trifecta, which the bond market has to worry about because you can actually push your stuff through versus having having a split Congress in which nothing's going to happen at all. Then the bond market can probably breathe a sigh of relief.
I mean, we haven't changed ever. The market loves the slop. The market hates the market hates the majority. The market it loves the slop. Literally loves the slop. And so, I agree with you. But I think that we got to one of the things that I did last week at these live events was I made the case that, listen, I'm just a contrarian, okay? When we're up, the market needs to be sold here. And when we're down, things need to be bought. There's nothing else to it. Let's not make the world, we're traders. Let's not make the world overly complicated, okay? Bonds are on their butt, so we're buying them. Currencies are on their butt, so we're buying them. The market's on its highs, so we're selling it. That's it. There's nothing else to this. Let's not try to confuse everything. Let's not try to make this. I'm not giving an hour and a half speech on some macro story. I'm not trying to explain, why am I getting long the Russell here versus whatever. This is nothing like that. It's just boom, 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 boom.
So you don't. Just to put a finer point on it, you don't think they did enough damage to stocks last week for your taste? Is that fair?
I don't think they did enough damage to stocks last week at all. I think the stocks are still on a relative. Listen, I'm very long the Russell, so I should be clear about that. So I'm not. I am long the Russell. I'm just short everything else. I think the small caps. I think the small caps will ultimately do better under Trump, and I think the small caps will will eventually outperform. I think they might have got a little oversold on Friday, but I don't think you can buy. I wouldn't be buying that dip. That's for sure. I mean, I think if you're a bear, you kind of want them to open a little higher tonight. I was thinking maybe 10 or 20 points higher. In the S&Ps, they're only up 5 right now. I mean, S&Ps are up 5, Nasdaq's up 36, Russell's up 2. That's not good enough, the way I look at it.
Can I just refresh my memory? So last week, midweek, when VIX was in the 13s, what was your buying power usage? Were you super low in buying power usage or high?
Yeah. Buying power usage.
Or just normal?
I was still you know what? I was still a little high because I'm short some premium, so I guess I was a little high. My buying power usage right now is about 50%,
Mm.
which for me, honestly, is a little high.
Mm.
I like to be 50 to 60% if the VIX is up in the 20s, but with the VIX here, I don't love it. But you know, we're getting a little closer. We're getting towards that 30 days, and as I get to 30 days, my buying power goes up a little bit. You know, because my theta numbers go up. I also have a lot of commodity option positions on right now, more so than I usually do. And as you get closer to expiration, those positions increase in buying power. You know, I think people have to. One of the things I focused on last week when I was doing the live trading was I tried to explain how important it is. Not necessarily. I mean, your overall buying power is important to know, just because it gives you some context around, how much portfolio risk you have. But I think that one of the most underused back of the envelope trading tricks is every time you make a trade, just look at your buying power if you want to know what your risk is. Basically the trade risk is whatever your buying power is.
Mhm.
Like, I mean, there's no other way that is the simplest way to just say, what is my, of course you can look at, Tasty shows C-bar, and that's cool. But in addition to C-bar, you can just look at your buying power reduction. That's your risk.
Well said. Let me ask you, I don't know how we got into this place where one company's earnings report is like the entire future of human civilization hangs on it. but that's where we find ourselves, Tom. Is there anything more important in the upcoming week than Nvidia? And how does the founder play this? Are you gonna play it as a binary event?
Well, I mean, you kind of have to. I don't think the Nvidia earnings will have a big impact on the Russell or the S&Ps or the Dow. Maybe no. Nvidia's in the Dow now, right? Yeah, so we'll in the Dow,
Yeah.
but we don't really trade Dow that much. But the Russell or the S&Ps, I don't think Nvidia will come into play. I think on the Nasdaq, yeah, it'll be huge.
Well, I'm
It'll
just
be
saying,
huge.
it's got a let me ask the question a little bit better. It's got about a 9% implied move. Is that big enough for you, a vol seller, to participate in Nvidia? Or do you think the realized risk in Nvidia is greater than that? That's really what I'm asking.
I don't think the realized risk is greater than that. In the past, you would look at a stock like Nvidia, and you would say, I mean, you would say, I wonder how they're doing. But now you look at a stock like Nvidia, which is a $3.5 trillion company trading, 3 ticks off it, or no, I shouldn't say 3 ticks, $7 off its all-time high. And you have to look at that company and say, if you're an analyst at any firm, you have studied this stock inside and out. You know every single thing there is to know. You're basically staking your job on your report. And obviously, everybody has Nvidia as a buy, but I would guess that the guesstimates with respect to Nvidia earnings and where the street has it priced right now, it was down big last week. It was down about $6 or $7 for the week, but I would say that they probably have Nvidia boxed up here like it's an Apple trade, and I think 9% is actually pretty big. What's 9% of what is it stock? It's 140 right now.
7%.
So 12, what is it?
It's about 6-7%, something like that.
Oh, that's all. Okay. Yeah, that's probably makes more sense. I was going to say, to me, 9% sounded like it was way too high. I don't have Nvidia. What is it?
Oh no, 9%. 9%. I'm all over the place. Sorry. That's all the Sudafed. It's 9%, $13.
Okay. I'll take a quick look because you're too hyped up on Sudafed. Let's see.
You don't trust my math now.
Yeah, $13. That's fine. So $13 for the week. So let's say it goes all. Yeah, it's 9%.
Mm-hmm.
It's a big number.
It's a decent number. And you've also, it's a pretty decent earnings week. You got some other retailers. So Walmart, Target. I don't know if you trade those binary events.
I trade Target a little bit. I trade a little bit of Target. I don't trade any Walmart. Walmart, Walmart, first of all, it's not a great trading vehicle. And second of all, I don't think it's had a downtick in a year.
Mm-hmm.
I mean, you would think that Walmart's making chips, not NVIDIA. Seriously. I mean, the way
Quick question.
Walmart trades here, you wouldn't know that they're in the frozen food business. You know, they're selling, ski gloves and frozen corn. You'd think that they're making semiconductors. I mean, I wouldn't buy.
They're in the comparative advantage business. They're in the economies of scale business. They're in something else.
Okay, call it whatever you want, but I wouldn't buy Walmart here with your money.
Real quick, I should ask you this off at the top of the show when we were just bantering around versus in the meat of the show, but I am curious. Did you watch the Tyson-Paul fight?
Okay, so here's the thing. So I was doing the show on Friday night in Dublin, and afterwards, we were done with the whole tour, so we went out, had a Guinness, had some Irish food in a pub. It was fun. The rugby game was on, so it was free for all. I think everybody in Dublin, all they do is go to pubs. Every place is packed all day long. And so I'm like, what time's the fight going to be on here? Because we had to get up to catch a flight back to Chicago. And they go, well, it'll probably be on at 4 a.m. I'm like, okay, because it's 6 hours difference. So I'm like, all right. I go, I don't know, if I wake up, I wake up. So I woke up that morning at 6 o'clock because we had to leave at like 7. And at 6 o'clock, I put on my iPad and the fight's about to start. I couldn't believe it. It didn't start here till midnight, I guess. And so I watched it. I thought it was about as pathetic as anything I thought it was 18 or 20 minutes of my life that I'll never get back. I hated everything about it.
The reported numbers that I didn't watch it. The reported numbers that thing did is absolutely mind-boggling, and it speaks to just how great Mike Tyson was, because everybody wanted to see that 19-second Iron Mike, and nobody allowed their minds to believe that, you know what, he's a podcaster now, a brilliant podcaster. He's a reformed kind of Genghis Khan type character.
You know what?
And he's 58, and you got that fight.
Take.
You got a 58-year-old versus a 27-year-old.
I have a different take. My take is, yeah, of course, everybody was rooting for Tyson. Everybody. I mean, it was a 99-1. But I think, and I am not a Jake Paul fan at all. I really don't like the guy on any level. But he's an incredible marketing machine. He's the marketing machine. It's not Tyson.
I agree.
He's a billion-dollar marketing machine. I mean, that's what he is. I mean, he's a below average. I mean, he would get destroyed by any competent boxer his own age and weight.
Throw him in the ring against Josh, and Josh would two-piece him up all day long.
I mean, he would be dead in 2 seconds against a regular heavyweight, a middleweight, even a lightweight. But he has marketed himself into $40 and $100 million paydays. It's unbelievable. He's a marketing machine.
It is crazy. He is. I would agree with that take. All right, let's get somehow from that. We're going to go from that to the yield curve. I love Tasty. Let's bring in Pete Mullman.
God,
Pete.
you guys covered it all there. I was waiting to talk about the important thing, which was the Tyson fight, and you guys covered that too. Wow.
Did you watch it, Pete?
Oh man, it was sad. Yeah, I did. It was. I mean, I think we all knew it was not going to be much, but it was. I mean, it was sad. If that's what's
that was
boxing's
the best
become.
possible outcome to me for both of them, because if I thought
the fight
it would
before
go
was
5
better.
or longer, yeah, I thought it would go five or longer, and there might be a chance of a brutal knockout. And I didn't think that was going to earn Jake Paul any fans, and I didn't think that was doing Mike Tyson justice. So the Paul decision, that's the best possible outcome for both of them. Anyways, what do you think about 116 bonds here, Pete? Is it a scoopy, or they need to do more damage?
I've been scooping them, Vic. I just want to go on record.
You're a scooper.
I've been scooping them. I bought some more on Friday. I don't know who's puking them here and why, but the risk reward for selling them here is the dumbest trade ever. Like, of course, they could go to 114, 112, but the risk reward here, dumbass trade. I don't get one.
I actually like the shorter end of the curve. I like the 2 years. So even though that I've got to lean against the creator on this one.
No. I'm not. You like
Yeah.
I don't care which ones you buy. Buy the 2s, buy the 5s, buy the 10s, buy
Yeah,
the 30s. I don't care.
I'm actually, you know what? I'm buying the 2s. I think the 2s will, and you're right, Tom. Whether or not we see 115 or 114 and a half on kind of the retesting those lows post election, I would rather buy 2s and then sell some 10s. And I'm instead of doing them 2-to-1, where you buy 2 2s and sell a 10, which is your traditional touch spread, I'm doing them 1-to-1 and kind of scaling them up. I'm sorry, I'm doing 4 2-years to 1 10-year. So I'm overweighted on the long side, but I like having some of the, I mean, that part of the yield curve went, out to 30 some basis points, back to 0. We're at about 11 now. Notes are 11, 10-year notes 11 points above the 2 years right now, 430 versus 441. I think that's going to continue to steepen. So I'd rather be long some 2s and maybe be with a little bit of hedge, short some either. And this is the tough part. I'm shorting a much smaller portion of the 10s than I usually would for the pairs trade. And I'd love to use calls with IV rank up, but I'm just afraid of, if Tom's right and they do turn and get a bid, those calls are going to consume the longs on the 2s. So that's the way I'm playing that right now. I think they're slowly marking out. We're still going to have a cut in December. They're marking a little bit of it out, but we're going to have a cut.
You think so?
Yeah. I don't think they're going to stop. There's no reason for them to stop.
I'm not so sure about that.
Yeah.
I don't think they will stop, but I don't think they should. I don't think we should be cutting in December. Who the hell? It doesn't matter what I think, but I think that's crazy. I think it's crazy to be cutting in December with inflation at 2.5.
Yeah, you know what? I think what they'll do is they'll cut in December, and then they'll say, going into the new year with the new administration, we're going to take a pause and see what transpires. And they're going to move all those other cuts off to the first of the year, further out in the cycle, and lower the number of them. But I think December is probably, they marked out the probability by 5%. Thursday and Friday, it's still sitting around, I think it's close to 50-50 or 35-45, somewhere around there. But I think they will do the cut in December. We'll see. Mm-hmm. But the correction in stocks was great to see. What do you guys, and I wanted to, Palantir has been on an absolute tear. And then they get this, they're going from NYSE to NASDAQ. They put $5 into it on Friday. They closed right on the highs. And now they're talking, because of its size, it's going to go right into the NASDAQ 100. And, I mean, Tom, you're a pot odds trader. Looking at the stream, this is almost a freight train that doesn't know where it quite stops. But does this interest you at all, just in terms of the move?
Well, I don't have a position on in there. So I would say that sure, I'm interested I'm a seller, but I haven't got short yet. That's all. I mean, I find Palantirs now, it's very tradable, but where is it, like $65, $66, whatever it is now? I don't know. Yeah, $65. Yeah. I mean, I would just trade it. I don't have any, like I said, I have no delta in there, no position. I still go back to, I kind of thought it was a junky IPO because it had opened with a lot of fanfare and hype, and it opened actually 2 days after it IPO'd. It came down to $9.
Right.
And I was sitting there and I'm like, I bought some at like $9.10 and $9.11. I remember I paid $9.10 and $9.11, bought some. I couldn't wait to sell it at $9.60 and make 50 cents. Like, I couldn't wait. I was like, oh my God, this is a gift. I never took a penny in heat.
Yeah.
I'm not selling. So I'm long. This is my retirement. So if you see me, if I'm 82 years old talking about, oh yeah, Palantir didn't work out.
Is this your bunker stocking up food, doomsday
it's everything.
stock play?
It's everything.
Okay.
It's everything.
It's everything.
It's a bunker play. It's the bunker play. It's the tech play. It's an AI play. It's a defense play. It's a free government money play. It's a bet on a great CEO play. It's a bet on a small, lean company play. It's an America First play in a way, but then it's also a diversified defense contractor. I just think, to me, I buy the dips here, but I don't want to. I think it's blowing his brains out. To me, it's crazy here where we are. It wouldn't surprise me to see 5 or 10% pullback, but I will buy that with both hands if it does.
Interesting.
Both hands.
I
I'll
don't know.
ask for a loan for Tom.
I
to
look
buy
at the
it more.
$30 in 10 days, and I find that really tough in terms of a stretch. But and
If it
especially
dropped
when
30, if it dropped 30, it'd be interesting.
yeah,
I heard I mean, there's a lot of cases where what Victor said it's the way it could play out. And then there's also, the SMI case,
right,
SMCI
right.
case.
Right, absolutely. Now you talked about Nvidia's expected move around 9%. Target's 10.5, which is interesting.
But Target has a history. There's
Yeah.
a reason for that.
Right.
First of all, Target has a history of Target's had moves as much as 25% before. So it has a history of those kind of moves. That's number one. And number two, a lot fewer people follow Target when compared to Nvidia.
Right.
My only argument is that, like, for Nvidia to have a surprise, I mean, you've got every analyst in the world basically ripping apart
Covering
Nvidia.
it. Right.
If Nvidia doesn't, Nvidia doesn't have the ability. Nvidia has to come clean with their real story. It cannot be, they can't hide behind anything.
Yeah.
Target,
What you're saying there, for anyone who doesn't catch it, is really interesting, and I wonder if you could unpack it a little bit more, Tom. Like the liquidity of information and so many people trading the underlying, it brings in all of that information gets priced into the marketplace, which gives you a tighter understanding.
It's called efficient market theory, Victor. It's called efficient market theory. If you've got everybody in the world, you have a 3.5. How big is Target? I don't even know. It's 50 billion or something. I don't know.
It's got to be bigger than that.
I don't know. How big is it?
70
billion. Okay. And you've got Nvidia, which is 3.5 trillion. So it's 3.5. It's 50 times bigger. 50. So anyway, my point is that a $3.5 trillion company, it's very hard to turn the boat around in the canal type thing. But Target, who knows? 70 billion seems like a lot, but nowadays 70 billion could be anything.
You are brutal. There was no reason for you to do that. It's called efficient market theory, Victor. Okay, Pete. Pete, you had some great calls 2 weeks in a row on gold, and you said they do some more damage in silver down to 30, and that might be a decent place to start adding. Both of those things came true. The silver upside hasn't happened. Right. I'm just curious how you're thinking about gold, silver going into the week.
Yeah, you know what? We had a great shakeout, almost 10% in gold. Silver pulled right back. Spent a little time under $30, but less than a couple of hours, I think. I think you accept the range and you trade it. I'm inclined to be a little bit more managed and looking at selling some skewed strangles in gold. Silver's tough to get filled on. I'd probably use the silver futures or the micro silver futures if I want that directional piece, but gold's not a problem getting filled on right now. Copper, the one I want to watch, around $4. It'll be interesting if copper gives ground below $4. I think that is going to put a little bit of drag on I think it's going to put a drag on things like FXI and going to put a drag on things like silver too. But if copper holds in here between $4 and $4.10, I think we see gold normalize a little bit and we see silver get back in the saddle a little bit and outperform. So I want to be bullish both those right now a little bit. I'd much rather take advantage of the volatility side of it in gold and play a little bit of the both sides, because I don't think we're ripping straight back up to $2,800. I think it's going to be a tough rally back up there.
You're going to have sellers. You're going to have sellers all the way up because there's people that are caught long up there.
Absolutely.
And I don't think it goes back. I think there's a lot of people that are stuck long.
I agree, but I think they're going to try a couple of times.
Yeah,
it's
sure.
going to give you a little bit of wiggle room. So I don't mind that. The dollar move is the one thing that's real. I mean, they did a lot. The dollar really was on a tear, did a lot of damage to the euro. And just strong, not to go into any of the currencies, but strong dollar is definitely playing through here, which starts to get a little disconnected from I don't know quite how that fits into if you're building a Trump macro story. That doesn't seem to necessarily hold water. So it'll be interesting to see. The only thing that was able to rally was yen last week. Euro really took it on the chin. Cable gave ground at the end of the week just on some domestic stuff, but the currencies have had a lot of damage done to them here. A little surprising to see.
No question. But Pete, we got to keep moving. We're way behind.
You bet, guys. See you later. Have a great night.
Yeah.
Yep. Ilya Spivak, welcome to First
Gentlemen.
Call, my friend.
Hello, Ilya.
How's it going? Welcome back.
Thank you. Ready to go.
Ilya.
And by the way, that chart you just had up of the euro, that's every contrarian's dream.
You going long?
Well, when you see something like that, it's not about that's not. They didn't just fire their accounting firm. The CEO.
I am definitely antsy. So I have been massively long dollars, and I am getting really antsy.
The CEO did not have sex with his team. There's a lot of stuff going on. All right. But whatever you want to say, if you're long dollars here, you're out of your mind.
I am. So I'm long. I've been long, though. I've been long for a while. I got long the first leg down euro from about 112. I got out when it bounced back above 109. I got back short about 108.50, 108. I've been short again, and now I'm getting nervous.
I wouldn't be short euro here with Victor's money.
It's not even just the euro. I'm short the Canadian dollar, the Aussie, the pound. I could not be longer dollars. I'm short gold. I've been short gold.
That is I hate that play worse than anything I've ever heard you say on this network. I have the exact opposite position on across the board.
I will say this. I am getting really antsy now because it's obviously had a massive move, and it might be time to start taking it off. I'm going to let it do what it did at the beginning of November. I want to see the turn. Once it starts to turn a little bit, I got lots of room. If it starts to bounce a little bit, I'm getting right out. So my fingers on the trigger, on the dollar longs, on the gold shorts, on the bonds, which I've been short, and they're also looking like they might be due for a bounce. So a lot of the trades that I have on have been working for a few weeks and working really well, but now they're getting to levels where I'm getting a little itchy. It seems like maybe they've shot their brains out here.
Let me ask you, there was a headline earlier today that Biden lifts a ban on Ukraine using U.S. arms to strike inside Russia. I'm curious, not on your political philosophy on right, wrong, whatever. Where does that manifest itself in asset prices, in your opinion?
I think if the markets were concerned, what you would see first and foremost is a kind of reflexive reaction in gold, just because people seem to think that gold is some sort of a geopolitical hedge. I don't really see the logic of that, but it has a legacy dynamic like that. You see it up just a touch here, but in the context of what happened last week, which was an absolute gold shellacking, I don't think that this says, oh no, World War III is on. This does not look like the market is worried. So if there were a massive move up in the bonds because capital went to safety, if there was a massive next leg in the dollar higher because people liquidated and capital went to cash, if those things were occurring, if the yen went on a massive rally because everybody dumped carry, okay, yes, it's not happening. The market would tell you. The market would tell you first. Before you saw any headline anywhere, the market would know and it would move. This is the kind of thing that the market sniffs out within seconds. If there was a real risk, you'd see gaps, you'd see moves. At least at this point, the market seems to think we're okay.
How are you thinking about risk going into the week? You heard Tom's point of view. contrarian on asset price, so leaning short asset prices with the exception of the Russell, leaning long in bonds. And on the flip side of these currency moves, how are you positioned against those three asset classes?
So I'm still long dollars a lot. I'm still short gold a lot. I'm still short bonds a lot, but I don't have much confidence in any of those going into this week. I think I'm probably going to be divesting a lot of them because a lot of them had a really big move. I think markets don't move in straight lines, and there's room for all of those to bounce. I still like all of those bigger picture because all of those are reflections of inflation and higher rates. Bonds going lower, inflation, higher rates. Dollar going higher, same exact thing. And everything, gold going lower, same exact thing. All of those are, we don't need to cut rates by a lot next year. Forget December. That's a 50-50 shot. Who knows? But next year, the scope to cut is not 100 basis points, like the Fed said in September. And everything you've heard from them since has been, it's not 100 basis points. When they come out in December, it's not going to be 100 basis points in the forecast. It'll be 75 or 50 something, but they'll water it down. So I think the trade as a concept is there, but markets don't move unidirectionally. Those moves are all really out there now. I do like equities lower. I started selling both NASDAQ and S&P about midweek last week again. So I had a great end of the week last week there. I think those have more room. I don't think we're done. So I'm going to hold those. I also have some esoteric madman illiquid ETF directional Trump trade things.
You're going to like these, Tom.
So I have the clean energy ETF short. It broke a range that it was holding for a year. So I put that on really long duration. It'll be there forever. It was super cheap. Whatever. If it expires worthless, I lose less than 1% of equity. Great.
Watch this, Ilya. Tom,
there's one more though.
Know. I know.
It's even matter.
Tom, you don't even need to know what's in this. Would you be long? Just look at this, a chart, and go, would you be long or short?
I mean, anybody that would be short this year, it's like
put a weekly chart on, and I think you can see it much better. You don't get context there. Now zoom out. This thing has been half this level before, so it's got room. If your time horizon is long enough, obviously. And my time horizon on this is like a year. And then you have, this is like the real madman. Tom, you'll like this one if you're a contrarian. MSOS. I think, and I'm long this.
Yeah, you had a good call last week. This one was up 25%. It was a good call.
Yeah. So I'm long this from the low, essentially. And this is after RFK came out and said that we should legalize psychedelics. And I said, well, if he wants to legalize psychedelics, the lower hanging fruit is this. And there is no securitized version of psychedelics. So I'll go long this. And again, it's like a year-long idea.
Yeah,
super cheap.
It's almost impossible to trade that. The options stink.
It's non-existent. There's no liquidity in this thing. It's gone down for years.
Product stinks.
It's a nutty idea. But I'm going to leave it on for a year. And if they try to deschedule cannabis, it'll have one really big move.
All right, Tom, just because this is too funny, I'm going to give you two more.
You're going to lose me if you give me one more RFK trade. Okay,
that's it. Exactly. That's all I got.
Because he's not even going to be 3 months from now. He's not even going to be around. Okay, that guy's not.
I mean, maybe, but if this thing expires worthless, I lose something like 0.5% of equity. So it goes.
Who cares? I mean, it's not even a trade. I don't care about that.
All right, actually, real quick, Tom, just because I can't help myself, on the announcement of RFK as the Secretary of Health and Human Services, we'll see what happens. We'll see what Senate has to say about that. Pfizer.
I thought it was a joke at first. I thought they were just kidding.
You knew it wasn't. Pfizer got murdered, down 2 or 3%. I mean, it was down a couple percent. Eli Lilly as well. So if let's put your money where your mouth is.
Well,
If you don't
I
think he's going to get confirmed, if you don't think he'll get confirmed, don't you buy this discount?
XBI lost 12% last week.
First of all, you never buy Pfizer no matter what happens, because even if you're right, you're wrong. Okay, you need a global pandemic in order for Pfizer to go higher. So Lilly is a different story, but you're talking about, Lilly's a really hard stock to trade. I mean, you're talking about, what is this, $700-800 stock? I haven't traded in a while. $750 stock. With $3 wide markets. Yeah, I don't know. Those aren't my, I'm not playing for. I'm not betting on him or against him, because if there's anybody in the world I care less about, it's that man. So I really don't care.
All right, let's go out on that. Tom, how about a parting word for the traders, and then I'll do the outro. We'll get out of here. Parting word going into the week.
Well, unlike Ilya, because I feel very different about all this stuff. The only thing we're in agreement on is I'm short deltas. I think that a rally tonight, tomorrow, whatever, little bounce back from Friday is a good place to probably lean into the short side. But I don't see, there are so many underlyings that are at a price extreme to the downside right here that it's actually really interesting to me. I know Vol's cheap here. So with Vol relatively cheap, it bounced up a little bit last week, but with Vol relatively cheap, you could actually, it's reasonable to maybe buy some debit spreads or whatever, but you can do it in bonds, you can do it in gold, you can do it in any of the currencies. I mean, there's a lot of things that to me make sense to trade from the long side, risk reward wise, pot odds wise. You're going to get paid multiples. If you buy euro here, you buy yen here, you buy anything here, you're going to get paid multiples of what you can lose if you're right.
There you have it, folks. Wise words. Just a quick update. Natty Gas up 4% right now. Do us a favor, on your way out, hit the like button, subscribe to the channel if you have not already, and log in bright and early, starting I think at 1:30 Central Time with European coverage. And then throughout the day, for Ilya Spivak, Pete Molmat, I've been Victor Jones. For the one and only Tom Sosnoff, this was First Call. We'll see you back here tomorrow. Peace.
Comments on the comments page. We've also got a really key market measures for you. Those of you trader friends that thought perhaps, whoa, as you're watching Tom go through the tastytrade platform and kind of thought after it like you'd been hit by a train, don't worry. Don't worry, because most people feel like that when you meet Tom. But also when you see that platform for the first time, you have that, whoa, there's too many things going on. What are all these numbers? But actually, that's a good thing, because it means that you're processing. And for me, it took at least a week, 2 weeks, 3 weeks to kind of understand what to look out for. And once you know which 3 areas to look out for, we'll take you through it here much, much slower, let me tell you, because even that was too fast for me. So we'll slow it down for you. But all of those that liked talking about those strategies yesterday, and you came up to me and said, what exactly was he talking about when he said iron condor and all that? I'll take you through a very basic explanation in market measures. So we've got all that to come. Just to give you some oversight as to how wonderful it was when I saw all of you. I also was being asked some very funny questions. Like my 9-year-old daughter was asking me things like, "Hey, why is it all these people are queuing up to talk to you, Mummy?" And then she didn't realize, and I didn't realize as well, that there was that big screen. I didn't know Rich, good job, Rich, had put up the sign to kind of show both of us and when our shows are. And she then went, why are you on the screen? So that was also the other interesting bit. She absolutely loved meeting all of you. Such a privilege. One particular comment that I had from the many of you that I met, which I found quite funny. Morning, everyone. Was someone came up to me and said, "Morning, Monkey Man, this one's for you." Someone came up to me and said, "Hey, really love it, watch your show." I'm not Monkey Man. That's great. So I was actually hoping it was Monkey Man. Monkey Man, were you there? Were you actually there secretly? Come on. But it was wonderful. That made me laugh out loud. The number of people that came up and said, "We knew you were in the room before we actually saw you because of that laugh." Thank you very much. That really made my day. But even better than that, I love the fact that you came up and said, "Hey, this is super useful. Thanks for taking it slow. Thanks for, taking us through it." Because, some of us don't quite go at such speed. We will. I promise you, you will. And you will get there. And, if my 9-year-old can process all that, she said, it's great. How do I remember all that? I said to her, I don't remember half of it. So don't worry, is the message. Some questions and comments on the box over here, away from the numbers, saying happy Friday. Truly, I welcome that as well, because as you can tell, I am feeling quite hoarse at the moment after last night, as well as the PCMs as well. Also, Rich McDonald saying, "Morning all. I'm in City Airport," he says, "about to jump on the plane to Dublin for the last night." So for those of you who didn't catch the last 4 nights, you still have a chance. Dublin is the next event. And also, Julian Musto saying, "Love the show at Neon last night." Hey, Julian, I think, did we meet last night? I think we did. I met a Julian last night, I'm sure. Matteo Di Napoli saying, "Morning, guys. Thanks so much for tuning in." Because Rich is away, I'm truly on my own here, people. And Fred is at a wine convention. And Caleb and Terrence are with me, which is amazing. Shout out to Caleb last night. If you didn't see him sitting next to me, all-star, because he picked our seats and he knew how blind I was and I have astigmatism. So I loved the pictures last night. Yeah, Terrence, he picked literally the seat for her, literally directly in front of the screen. In fact, he just sent me the photo and a video. Let's see if we can hook this up for you, if the tech is working with me. Let me get a full screen. There you go. That's a scene from last night as we arrived quite early, but it soon filled up. It was standing room only. There I am in green. And now let's go to some of the pictures for you last night. Here is Kayla. Well, let's go to the stage first. This is the stage where they were presenting Tom and Rich. And doing a great job, might I add. Great crowd last night in London. Very engaged, asking all the right questions, talking about NVIDIA. I will be looking to sell puts on NVIDIA later today because, I don't want to take off my position. But, the options front gives you a way of also kind of covering. What I like about it is it helps you cover your back. Here we are, Caleb and Richie Rich, and looking amazing, might I add, for Caleb, 4 days of being up super early and helping me carry it solo here, and Richie Rich looking wonderful as always. And here he is in his trader coat. Caleb went up to Rich yesterday and said, "Oh my goodness, it's you, Rich. Oh, can I take a photo? Can I take a photo?" Oh, I bet he loved that. Brittany, the true guru behind the event space for us, is the one with the blonde curls there. She is, let me try and zoom in for you. She is literally the person that helps everything works seamlessly, and she's in the boiler room. And she's the one that on, I think it was Tuesday or midweek, was stuck in a lift, and she was trying to call for help from this lift that stopped working. and everyone else was having dinner, and they turned off their phones were on silent. So poor Brittany was in the lift for 30 minutes, I think. I think she's still going through therapy for that. But it was such a great night, so good to see all of you. And let me try and get out of that space. So we're going to go to overnight action soon, but we'll have more pictures from the night because we've got a picture of myself with Arsax and also Sonali and Badi. Welcome back, trader friends, dirty dogs. This is the overnight action, the part in which we go and give you a sense of what happened whilst you were sleeping, right? So the very first one that we're going to talk about today is Powell says the Fed doesn't need to be in a hurry to cut interest rates. Now, I really like this story because, and I'm interested in this because I love everything to do with interest rate futures. What's key here is, remember Powell last week said, I'm not stepping down, not going, nada, I'm not going. Then there was all that expectation, of course, that he was going to say more on Thursday after that very intriguing comment. Well, he came out and said on Thursday that the US is still in a strong place, economic growth remains robust, and this will allow policymakers to take their time in deciding just how far and how fast to lower interest rates. What's key here, people, trader friends, is to remember that we had very, very low prints in the summer period for inflation. All this means that if we have this Trump inflation coming our way, and that boosts the expectation that rates will have the ramp up to push down inflation, the dollar will rise. And because inflation is expected to rise due to his inflationary policies, that come summer 2025, we're going to see a very high print because it's versus a very low base, right? But Powell here is saying, calm down, guys. The economy not sending any signals yet that we need to be in a hurry to lower rates, he said in Dallas, and also added that they're not in any hurry. So without further ado, Chris Beecham joins me in the studio right now like magic.
I was very impressed. You were clearly trying to keep going while I was in the corner of
You
your
were
eye.
very graceful.
Yes.
He's like a
Move very silently.
black leopard.
Whispering death, that famous West Indies bowler. Holdings, Michael Holding? I forget now.
30 years of this, and that was impressive.
Thank you, thank you. Imagine if I'd gone over, there's this carpet, imagine if I'd tripped up and gone
Yeah,
flying.
and photobomb me in the back.
Yeah, it still would have been graceful, but...
So what do you make of, I mean, the Fed's been really, really vocal of late, right? JP, what do you make of these recent comments? Is it a case of going, hey, Trump, buzz off, this
we
is
covered
my
this on Monday, didn't we? We talked about Powell on Monday and how I'm not going anywhere. Yeah, it's really interesting, and you've seen the CME FedWatch expectations for the December meeting coming down from sort of 80% to 60, although they still, I think everyone's expecting them to cut in December, maybe to pause from then on. JP Morgan saying overnight, maybe this means that you won't get another cut in January or when they next meet. Yeah, it's kind of no change from Powell, I think, because the message has been the strength of the economy. We don't need to rush this, and that makes the 50 basis point cut look a bit odd, to be honest with you. It's not ideal, I think. It doesn't. Remember, because back in August we talked about panic rate cuts. Remember those people going on CNBC and saying they need to cut rates now. The market's down 10%, blah, all this nonsense. And then you had a 50 basis point cut, and now it's back to calm prevails in the world of central banking, which is how it should be, of course, because the thing is with central banks, you don't want to be rushed into things. And this is the message you're getting from the Fed is, why would we need to move quickly? Unemployment's in a good place, inflation's down. Yes, you've got a new administration whose policies could be inflationary, but we don't know what that is yet. How quickly will the tariffs come in? Will they be introduced? There's people talking about Trump may be introducing tariffs on a sliding scale. The more you do as he wants, the less you get, if you to put it that way. So it might not be that you get this sudden huge surge in inflation from January that the Fed needs to respond to. It could just be we cut in December and then we wait and see.
How about the case for the summer? You heard me talking about the you know the print this year.
Comparative.
Yes.
It's always the problem, isn't it? That's the
is.
problem. If you do, it's like any company. If you do really well in one year, you've got a tough bar to meet the next year, and that just makes life a lot harder, and then makes performance look poorer by comparison. So yes, I think that's certainly the thing to watch for, and the core inflation is running above where they'd like it to be, clearly. So that it does make their life more difficult, I think. If you look at where the dollar's come from over the course of the past week, it's had a fantastic couple of weeks, to be honest with you. 1 year highs, further gains yesterday. We nudged above those April highs. I don't know if you can see my chart on the screen, but up towards 107, the next thing to watch for. Not seen since October of last year. It's a huge, huge recovery there, and no sign of that slowing down either, really.
It's huge. I'm putting up the dollar basket for you. I'm bullish the dollar, and I am so.
It's always easy to be bullish something when it's gone up massively, though. That's
well, but it's also into next year. I just think that, you know, with the policies he's talked about and how it's going to affect the market, and also speaking to my 31 first cousins spread across the United States and Canada.
It's like having a good broad base of opinion.
Yeah, who needs a poll? I mean, I've got an
Have you weighted accurately? Did you ask them how they were going to vote? That's what I want to know. Did you ask them how they were going to vote?
Of course I did. Of course I did.
And what did they say?
All the ones on the East Coast were blue.
Right.
Don't have to ask the ones on the
West Coast.
Yeah.
Because it's obvious.
Well, other than New York, right?
Ah, yeah.
And then I said to the Tasty guys, I was like, I've got loads of family, East Coast, loads of family, West Coast, not much in the middle. And like, you got us now. And I even polled the people in Chicago, all those people that I met there, and they were saying that, you know, it's feeling like a shoe-in. And that was across the board.
What, for the Trump? Oh, well, okay.
And this is the evening before.
Oh, well, yeah, the evening before.
And also, like, if anyone voted sort of after the polls in some states opened by the 26th of November, so that was like the weekend before. If anyone voted after that weekend, it was like ghost town. I mean, I had cousins saying that they were driving by these voting centres.
And there was nothing. Because everyone had voted.
Yeah.
It's fun, isn't it?
Yeah. All done. I mean, you know how much real estate, how much space they have there, and how easy it is to get free parking. They said if you parked your car, voted, went back to get your car, you would have spent more time voting. It was that quiet. And then, I mean, the rest of the time, I mean, they're still partying. I mean, I was showing Issar pictures yesterday, still yesterday. We're having not just weekend parties, people, we're having parties during the week. And these are like Trump win parties. And all that requires lots of driving around, lots of buying food, lots of buying stuff, lots of buying flags, more flags, right?
Yeah.
And we're coming up to Thanksgiving, another inflationary period. So I just think, also let's take a look at dollar yen as well.
Oh, yes, the great recovery goes on. It's fantastic. Just when you thought a trend was down and out and was done for, it's back again.
Yeah.
It's fantastic, isn't it? And
155 level.
155, BOJ talking about it again. Currency intervention on watch. It's amazing how we come back here after the summer. We thought it was done, we thought it was dusted. The Fed was cutting, the BOJ was hiking. All was to the downside in dollar yen. And never underestimate what markets will do. Because again, it's that classic moment of you hold a ball underwater in a swimming pool, and then you let go of it. What does it do? It comes up and it smacks you in the face. And there we are. If you shorted
How many times have you held a ball underwater?
Well, I have done it a couple of times, enough to test the theory. I read it somewhere anyway.
Is that why your forehead's so red?
Yes, exactly, yeah. Yeah, so that's...
Right, let's go to the next headline. Let me just get it up for you. One of the other key things we've been talking about this week is Tina versus Tara. And, you know, we are now at extremes. Three drivers of the stock market's bull rally hitting extremes and point to lower returns ahead, says an economist talking about...
Oh, David Rosenberg, he's my favourite. Oh, if there was a man that's uber bearish all the time, it's David Rosenberg. Oh, Or Rosie, as he's affectionately known.
Rosie. Do you think this time round any substance in those comments? Tom is a contrarian, and there are many of our viewers and trader friends at the event last night. Tom was saying that he holds this, he loves the contrarian. He is a contrarian trader. He is bearish Tesla, bearish some of the major indices.
Right.
Are we near a top, or are we still going to see this continued melt up?
If we had a crystal ball, I would tell you. The point is, people like Rosenberg come on and they say the market's going to face a tough time. They can't go higher. The markets are expensive. That you can't argue with. Look at the P ratio. Look at the cyclically adjusted price earnings, or CAPE. It's the one that everyone gets trotted out when everyone's talking about this. Yes, and there's no reason why they can keep going up any further. But earnings will be what drives it. There is full of expectations of further earnings growth. Now, the market has had an incredibly strong run since August, if not since earlier. And we haven't had a major correction, call it pullback correction, bear market since 2022. Like far the market's come in that space of time, which means we're kind of overdue one. But people have been saying that markets are due for a period of weaker returns for years. And look at where we are. 21,000 on the NASDAQ 100, 44,000 just recently on the Dow. There's no sign that this is going to change direction in any meaningful form in the long term. And the point is, they get us on CNBC because it's interesting to say this. Market's facing a tough time. Well, it's not hard to say that. They've gone up a lot. But where's your catalyst? What's going to be the driver? And it's not the thing that everyone sees coming. I get this all the time talking to clients. Actually, it's, oh, this will make the market go down. No. If you can see something coming, if you can see why something might go down, that's not going to be your problem. Something else that you haven't seen coming will drive it. Like August, like the Bank of Japan. That's the summer crisis that we didn't expect to happen. And that's the kind of thing we're looking for on a more sustained basis. So yes, markets are expensive. They're the most expensive they've been since the end of 2021. Cue dramatic music, because we know what happened next. And they do maybe look ripe for some kind of sustained post-Trump election hangover, maybe into the first quarter of next year. Does that change the longer term picture? Don't know, but I wouldn't bet against it.
And this is true, isn't it? We talk about this all the time. Markets are truly random. I mean, some people say relative. It's just random. You can't expect, what is going to happen. They don't owe you anything. They don't care if you get smacked in the face. It can go up as well as come down. And that's why we have all these tools in the IG platform where you can look at expected move. You can look at implied volatility. We talk a lot about history. Our friend here is a great history buff. Chris loves a bit of history.
Yeah, to say the least. Yeah. Markets go up and down, not up or down. This is always the important thing to remember.
And stocks and markets don't shoot up. Trees don't grow up into the sky.
The cliches are thick and fast.
Well, you have to. So we have a few questions coming up here. First question of the day from B. Hass, if you can. He's asking to review the DAX, if you can. Chris, what are your thoughts on the DAX?
Well, this is a fantastic recovery yesterday for European markets, and particularly the DAX. And the DAX is looking better than, say, the CAC, because it's, as I look at it, it's above key moving averages. It continued to rally its record highs, whereas the political worries have sunk the CAC. So, yes, look at that trend. It's had a period of consolidation over the last few days. I would still argue that clearly the trend, I think you can't argue with the fact it's moving higher. It's still above the highs we were at in the summer, which is another encouraging sign, really. That early September high around 18,960. So it dipped briefly below it. Sorry, I can't get my words out this morning. Briefly below it, but 19,000 has been kind of your line in the sand over the past 2 or 3 months. But certainly the trend continues to remain supportive. We saw a bit of buying yesterday that might be encouraging. I think it's a good sign. Yes, you've got obviously Germany in the elections next year, so there's a political worries certainly coming into the Eurozone as well on that front. And you've got the new administration. Will they impose tariffs on not just Germany, but of course with China, and Germany being a key trading partner? So you can see why, again, there are reasons to be cautious about the outlook for the DAX, but the price is the only thing we're going on at the moment. even look at the monthly chart. It's a fantastic chart. It's had a notable
look at
recovery.
how
Look at where it's come from.
yes,
And it may not have done as well as the Nasdaq in percentage terms, but nonetheless, it's a very, very impressive performance from the DAX, and so far looks fairly solid.
For those of you that are looking for pairs trade, the DAX tends to pair trade really well with the FTSE. We just have a minute left, Chris. Let's have a look at one that is close to my heart, which is oil. And we have a question here as well from Quick Gas Services. Loving your moniker, whoever you are, wondering whether you are from the oil and gas industry or have some sort of background with that name, Quick Gas. Quick Gas is asking, any thoughts on ideas on gold and silver? We'll get to that, but let's talk about oil first.
Oil first? Yes. Another miserable week for oil. And it's Chinese demand that's really weighing here, I think. The Middle East headlines give you a bit of a bounce, but it's where's the demand coming from China? The answer is it isn't, and that is putting a lot of pressure. It's the worst week for oil, I think, in a quite some time, to be honest with you. And if you look at WTI, we're now down at 67.20. This is kind of the level we got to in late October and also in right at the end of September. Again, with technical analysis, with charts, we're not saying if this goes through this, it will be the end of the world or whatever. But it's in a level that was important before. It could therefore be important again. It's just worth watching from a levels point of view. And then just below that, you've got early September. But really, again, I tend to use moving averages as a sense of, it gives me a sense of where the trend is going. At the moment, that trend is clearly down. You've had a lower high by the beginning of November. That follows up from one in October. So the move to the downside is clearly there. And I don't think there's much to really change that on a fundamental basis. And if OPEC let these voluntary production cuts roll off next year, everyone's going to desperately start to try to produce more, and you can see why oil comes down. Which, not to be difficult about this, but that would torpedo your inflation thesis slightly, because it would at least take one bit of heat out of the readings.
But the thing is, we are, on the ground, the US economy is so hot.
Yeah.
And also, I just think oil is another worrying factor because, this is happening in a time when oil is already really low. I mean, prices are low.
The fund manager survey yesterday in Bank of America, allocations to energy stocks are at their lowest in months and continue to fall. So people are perhaps understandably bearish on oil stocks, which is interesting from an evaluation perspective. That's not a buy recommendation, of course, to say you just go in and blindly buy oil stocks. But the fact they are quite unloved is always something that should make you go, that's interesting.
Yeah, and also they're great divvy stocks, aren't they?
Yes, yeah, you can't argue with them.
Just whilst he's going to show you his come up with his list of the great divvy stocks, I'm going to show you my chart because I'm going to show you exactly what Chris means. Oh, we have to go to break. We'll show you this when we come back.
Hi, I'm Sean Murison, Senior Market Analyst at IG, and join us for our new show, Charting Essentials. That's every fortnight on IG.com, our trading platform, as well as YouTube. And that's a show where we look at everything technical analysis, hoping to help you upskill, whether you're starting out or just looking to level up. We got you covered. In each episode, we'll break down complex concepts into easy to understand lessons, provide practical tips to help you sharpen your chart reading abilities, explore powerful technical indicators and their real-world applications, as well as guide you through hands-on examples to reinforce your learning. So come, let's work on our skills. Let's get better at this. Let's accelerate that trading journey, learn to have confidence to trade, and make informed trading decisions.
people. Welcome back, you dirty dogs. We are just 2 minutes from the open. Chris, what are you expecting to see early this morning? Some of the big ones, I guess, reporting probably out later, but it really is all about Forex and indices and lots of broker ratings as we head into the open.
Yeah, grim start for European markets really after yesterday's gains, so that's interesting. Also, a bit of pressure coming through in the US, no doubt, on the back of that Powell update, really. Some of the Fed, not necessarily taking away the punch bowl, but really pouring a bit of cold water. I can't do words this morning. I'll just go back to writing things. It's easier.
Okay, that's like my life, really.
It's, yeah, pouring cold water on more rate cuts. It's taking some of the froth again out of US indices. But yeah, I think it's going to be an FX kind of day. You've got US retail sales later, so it's the only real economic data point of note. But yes, the one I thought was quite interesting was Burberry. To be honest with you, soaring after yesterday's results.
30 seconds to go. Let's just take you some of the early indications, people. This is definitely not confirmed. This is just an early indication. Antofagasta indicated up almost 3%. Frasers up 2.3%. Howden up 2% as well. Also taking a look at the Schroders and SSE for Rich. SSE indicated up almost 1%. Schroders up 1.2%. Sainsbury's up 0.5% there. 10 seconds to go. Some of those indicated lower include Unilever, Berkeley, Reckitt Benckiser, and EasyJet. Right, and we are off. There is the opening bell. We are looking at a slightly risk-off start at the moment. Tech 100, Wall Street, all lower. Germany 40 down 0.5%. FTSE also down 0.5% there. Getting my watch list up right now for the FTSE for you, which I built myself. Right, so we've got on the leaders board, Pershing, Frasers up, as I said earlier, that was indicated higher. Reckitt also slightly higher.
Land Securities, the upgrade to full year forecast, so it's doing just what, 1.2%. So decent numbers there. Talk about dividend stocks, of course, one to watch there.
Let's take a look at the losers then. GlaxoSmithKline down 3%.
Nasty.
BAE Systems down 2%. So quite a lot happening out there. I'm just taking you through some of the broker ratings as well. Aviva raised to buy at HSBC. Burberry, you talked about that earlier. Let's see if we've got a move on Burberry.
Absolutely storming move yesterday, 17% higher off the back of those numbers, which weren't great, to be honest with you, but that's a classic case of you had such bad news all the way through the year that there are bound to be a lot of people maybe, and I don't want to, this is a classic analyst, I don't know why this has moved, so I'm going to blame people closing out the position as short covering, but that could well be it. It's people just closing out some shorts after what was it was a fairly mixed update from Burberry. And as I said at the beginning of the week about if you get a lot of blur between an RNS, it means there's bad news to come. And lo and behold, there was awful news from Burberry in terms of it swung to a loss, I think, didn't it, yesterday. So really, really poor figures there.
Which actually makes me slightly perturbed and confused to read that after all that, Burberry's raised to neutral at Mediobanca.
Well, bad news in the price, I suppose. That's always the key thing to watch for, really. It's a bit of a kitchen sinking exercise, I suppose, from Burberry. All the bad news is now known. Maybe some optimism about China. Yeah, get it in there. And then, lo and behold, you got your 16% bump in the price. Does it go any further? That's the key question here, because clearly if you dip bought in Burberry a couple of weeks ago, you've done fantastically well, you know, with 300 pence higher than where we were. But look at that longer term trend and it gets grimmer and grimmer the further you zoom out, really.
No, I had one of Luke Moore's clients asking me, you know, why did you come out of Burberry? This was before China Tuesday. I think
come out short or come out long?
No, I came out completely of my long trade before China Tuesday because he was laughing, and I think he's got 60K in Burberry. I said, well, I just felt like I got to the end of my thesis for Burberry, looking at just the fundamentals and looking at the signals, and I thought I can't stay in any longer. So,
and of course, bid talks lifting them as well to an extent.
Of course, it hurts when China Tuesday happened. It really hurt. But we talk about psychological bias all the time, so it shouldn't hurt. Right, AstraZeneca, I'm hearing Caleb tell me.
Second biggest company in the FTSE 100.
Down now almost 2%. Adding that to my workspace. This is the 1 minute chart, people, so that you can get a better view of
Panic
that.
too much if you see that.
Yeah, 1 minute chart. It is down around 2%. AstraZeneca, they're one of the ones that we've covered a lot this week. And the latest news as well from AstraZeneca and that space, yeah, is that the Soros Fund has Soros Fund Management raises its share stake in AstraZeneca by 8.2%, but dissolves its share stake in United Health Group. This is according to an SEC filing. So for those of you that trade pharmaceutical stocks, be wary. Be wary of all these, sudden filings.
Yeah, this new health sector in the US could be very interesting, of course.
Not be
Make life a lot more interesting.
as interesting as the head of defense.
Ah, yes. Fox presenter. But also he was a non-commissioned officer in the army, so it's not entirely... And this is Trump's appeal, I think. People will say, oh, well, you've had 15 years of employing experts in charge of the military. Maybe it's time you gave someone who wasn't a senior officer
A chance?
Yeah.
And also, I was thinking, if he called up, someone like Putin and said, you're going to talk to my head of defense right now, like Putin wouldn't know what to expect, right?
Yeah.
It'd just be like,
Always do what your enemy least expects. It's a classic military aphorism.
Yes, but what a shock and surprise.
Shock and awe.
Shock and awe. Also, GlaxoSmithKline also on the move, talking about drug stocks, also down 2.9%. These are all companies that were loved during COVID.
Have you seen Moderna recently? That's a terrible performance for them. Sorry.
Moderna is my favorite ticker of all time.
Why? MDNA?
mRNA.
mRNA.
But also, they have been, it's been so volatile for these stocks after COVID. They've been trying to diversify, and we've seen a real bifurcation here, haven't we? Those that have gone down the oncology route to try and find oncology drugs and treatments, and those that have gone down the obesity and diabetes type drugs. And GlaxoSmithKline here, another example of how tricky it is. What we're getting here from the day before is that we also had news from the previous session, vaccine makers, packaged food companies sliding as Trump taps RFK to head the health agency. We talked about this earlier. This is potentially a follow-on from that reaction. Because BioNTech, Moderna, actually none of them were spared, were they?
No.
Most of them were
It's the baby out with the bathwater kind of thing, really. But then GSK is a great example of when you're lucky enough to be invested in a broader index, you don't get those swings and arrows, because if you look at the performance of GSK, it's gone nowhere in 3 years since we're back down to the lows of late 2022. We're not that far off, really, from the lows of early 2021. So it's been a very rough performance. The thing that speaks in its favour, of course, is the dividend, because it will at least give you that income, even if the share price performance has been unfortunately dire. Over the last 5 years, total annualized return of 0.5% a year. So it's not really great. If you took the dividend out of that, you'd be firmly in negative territory, but at least the income is coming through there.
Yeah, one that is marching really higher, more than 21%, actually almost 22% now, is Evotech. This is also a pharma, I believe, AG, and also Evotech. This is a German drug development company, up more than 21% now. After the biotech company Halozyme made a 2 billion euro buyout offer to the company. So this is an M&A play, people. And also, those of you that cover and trade pharma stocks, this is really an interesting time for the sector as a whole, because we are seeing M&A start to kick off in the sector, and this is just one of a few that we've heard recently. Evotech, have to say, if you look at its share price, rather still quite low from its 18th of October highs at around 2021. So just be aware of that it has really slid from those 2021 highs. So this bump, good on you if you foresaw that. But this is a downward trend.
This is the problem, isn't it, really? You're buying these small farmers in the hope they get taken over, but as you can see, it's been getting cheaper and cheaper, and doubtless the bidders have been thinking, well, I won't buy it yet because it'll get cheaper. And then, okay, you've got out at a much better price than you would have done, but it's definitely not been a great performance the last 2 years.
Yeah. So, R. Sachs, lovely meeting you last night. R. Saxena was at the event yesterday, and she's really keen on defense stocks, adding BAE Systems, which is down 1% to the chart. This is the daily chart here, so you can see.
Amazing performance of the last 3-4 years, though. Fantastic.
Yeah.
Fantastic rally.
And also, she was asking today, why are BAE Systems, Rolls-Royce falling recently? I think it's just they rose, right after the whole Trump sort of euphoria, right, and the whole kind of all the murmurings he said about we need to boost defense, and then also saying that everyone
Europe
in Europe
needs to pay more.
You need to put more money into the pot, people.
He's not wrong,
right? Chris's view is he's not wrong.
So it's one thing I've always agreed with him on is that.
Muttering next to me.
You can't expect the rest to keep picking up the tab. I mean, it's ridiculous.
And so this is just coming off, as I say every time, when you trade these stocks, anything to do with Trump, be aware that it is going to come off. It is going to come off that,
news is in the price eventually.
Exactly. And it's in also the rumor and the price. Once it happens, pat yourself on the back, quickly come out. We saw the same with Core Civic and also the other prison infrastructure builders. Spoke to some mates in Austin, and they were saying that no one wants to say anything because there are a lot of people there that are working for the prison infrastructure industry. Or they call it detainment. Don't call it prison, just call it detainment. Or
detainment management, something grim.
Or the other one I've heard a lot is processing facilities, processing.
Grim, grim.
They're not saying anything because they're kind of sitting there thinking, well, more work's going to roll through the door, right? And so back to defense, also taking a look at...
BAE is up 55% since October. So I think if you're expecting to go high, you're probably not wrong, but consolidation. And this is the thing we talk about trends. You've had big gains. The market has to digest this stuff. I think it takes a while to consolidate, and you had the news about Trump. I think if you think defense spending in Europe will go high, you're probably right, and that should benefit BAE and others. Yeah,
and we talked about this earlier as well last week, Chris, because we are really interested in I like military history. It reminds you of how often humans just forget.
Yes, same thing repeats itself so often again and again. Yeah.
Hensel people, I talked about this with Andrew Duck yesterday at the event. Lovely meeting you. Thank you so much for the hack. We exchanged loads of notes and also I spoke about Hensel. Have a look at this one because many fund managers have this on their books, although they don't talk about it. And I'm telling you, this sector moves in tandem. So this, as you can see with the share price, mimics kind of how BAE Systems moved, right? And
tends to get a bump very early in every year, 2022, 23, 24, really Q1 bump, and then it doesn't really do much for the rest of the year. So that's an interesting one to watch, particularly how that plays out.
Let's check it on Northrop, which is US 1. And I know it's not open yet, but I'm just trying to show you the pattern, people. I'm just trying to show you the pattern because you'll see a similar pattern there in the last few sessions. Because like Chris rightly said, everyone needs to process this. You'll have, loads of, algorithms in place too.
Yeah. Nothing, no, like you say, trees don't go to the sky. The trend can't keep going on. It has to, it rallies and then it will have a period where it just digests all the news and factors in and people look at it again and then it moves off again, I think is the way to go. You don't often get, Nvidia accepted, stock prices that go up and up and up and up.
Don't jinx, don't jinx.
No, I know, sorry.
Sell puts later on after the, yeah.
Gone up lots, therefore it must go down. I'm not sure I agree with the thesis, but
The retired Angeline is getting quite worried about this Angeline. The retired Angeline. Yeah. Okay. So let's have a look.
Those two get closer together every day.
Yeah, they do. What is it saying? You're only the youngest you are right this very minute. Something like that. I say that as Chris is laughing with me, not at me. Let's have a look as how the European session has shaken out. Taking a look at the France 40 on my list.
Poor France.
Poor France. We can say that because Fred's not here. Teleperformance up. Let's start with the gainers first. Renault also up slightly, but it really is a risk-off day over there. Sanofi down more than 4%. Amid that weakness across the board with most pharmaceutical stocks.
Dassault as well.
Yeah, Dassault is also down 2%. Capgemini down 3%. What's going on there? What's going on with Capgemini? L'Oreal down 1%. Airbus down 1.3% as well. And Thales, as I said earlier, the sector, just like luxury, they tend to move. It tends to move like a herd.
Well, yes. I mean, most sectors do, though, don't they? I think is the way to look at it. The things tend to move in waves.
Some of them don't like it, like miners. You have to be very careful to sort out all the different miners, and some of them, don't.